Welcome everyone to MicroFinance South Africa's conference. I want to welcome members, non-members, credit providers, other providers, service providers, stakeholders, the National Credit Regulator, the DTIC. Thank you so much for joining us today. We really look forward to a fruitful day. There will be no presentation, so everyone will be wide awake, nobody's falling asleep. We are going to listen to the regulator, the NFO, we are going to listen to funding opportunities, compliance, and also a number of panel discussions. There's also people in digital attendance. They are on a Zoom link, which means this will be recorded. We have emergency exits on the sides. I'm definitely not in an airplane, but on the sides there's emergency exits. There's a paramedic on site. If you do not feel well, please let us know. There's a designated smoking area, and then you all have seen the exhibition area. I think the exhibition area is very nice. Please engage with the exhibitors as they've got a lot of information to share. Empowering diversity, promoting compliant practices in the microfinance community. I want to welcome everyone, even if you are non-compliant. This is the place to get your business ready. We are going to get you compliant. We've got booklets. We've got everything in order to solve your problems. For the people that has been in the industry, compliance is very difficult. It is expensive, but today we are going to work hard to get you compliant. We are going to start off the day with certain videos, and the first one is Unlocking Financial Inclusion.
Actually, it was my wish since growing up to be an entrepreneur. My name is Lefa Cholwane. I registered this business 2020. Yes, then I started operating in this office in 2021. I'm offering small loans, not bigger amounts. I'm working with pensioners here and people with disability and SASA people.
NewPay provides a payment solution system. By this system, we just, promoting all our customers to collect safely and also quickly.
NewPay is helping me with a lot of things. It makes my work very simple. It makes my business run smooth because everything is recorded on the system. Debiting, creating loans, checking people, doing an ITC.
Altron FinTech is big on small businesses and equipping them with the right tools to actually grow. We live in a country whereby it's still developing and people are unemployed. So when they do want to grow the economy and start a business, that's also them trying to create, jobs out there for the surrounding areas in their community that they're actually operating around. I'm talking about individuals or merchants out there who have started by themselves, but now they have about 6, 7 employees. Before they were unemployed. And they're utilizing this system because now the owner cannot only focus on one thing because you also want to expand or grow their business. And they're opening branches because it's growing massively. It's out of this world. And they also get excited because they know that they're actually doing good and, they are self-employed and, self-made as well.
And my wish is that even when I'm old, my company keeps operating with that legacy. That's my wish.
On that note, I'm handing over to Paki Mpashlele, our chairperson, to do the opening of the conference. Paki? Oh, Paki has changed.
Quickly grow taller. Dumelang. Lebitso ya me ke Sophie. And batho ba di Sophie ke mosadi. And I know I'm Sophie. So what I've just said when I introduce myself to people, I always go, I'm Sophie. And the people go, hey, Sophie. So I go, no guys, it's Sophie. But anyway, this is not about me. Just a brief, quick introduction of myself. I don't want to do it again. I am from the Free State, from Bloemfontein. I was born there. I started microlending in 1996 and still involved. Enjoy the industry, humbled, and want to see it go places. They say the Free State is so flat, you can see your dog run away for 2 days. Without ado, ke batla ke a kopa Ntate Paki, our newly elected chair for 2024, utle and address the audience. Paki.
Thank you, Sophie. I think it's clear now. His name is a Greek name. His name is Sophie. At first I thought it's a lady, but I found it's male. Sophie, thanks very much. Sophie is our vice chair at MFSA. So I had a friend of mine who, remember people now they use TikTok, they are always scrolling through. So they scrolled through MFSA, they saw me as a chairperson, and then they just found Sophie as one of the vice chair with a Greek name. Somebody called me, Paki, are you in the restaurant business? I said, why? He says, no, I see your vice chair is a Greek. He thought, if you are Greek, you are not in micro-lending, but you are in a restaurant business. Thank you very much. As a newly chairperson of MFSA, for the 6th consecutive time, I feel privileged to open what seems to be a dream about 30 years ago. I can say we made it. The room is full. It seemed impossible that this will happen, but we made it. Our founders came together as micro-lenders in 1996 to form this organization. 1996 was just 2 years after 1994. That is why others call this the post-apartheid industry. At that time, they were all male, they were all African-speaking, even the staff members. In one of my first board meetings, they had to translate the board pack into English because I don't understand technical Afrikaans, but a normal one is by saver and goed. Maar die een van micro-lener associatie en die voorzitter, I was not sure of it. And the CEO in Afrikaans, I've been practicing before this speech because I remember, but up to now, I don't know how to take chances. Anybody who knows the CEO in Afrikaans. So they had to get a board pack. That's how far we are. But they put together, one thing that's impressive, the reason why we're still here is because they put together a document that was sustainable. Annual elections of leadership and a strong governance and strong financial reporting. The reason we've got surplus now is because they made a solid foundation. We are here because of our founding fathers of 1996. But at that time, never did anyone believe nor anticipate that Providence and the gods of Africa were guiding them to create an organization that shall lead the transformation of the financial system in the post-elections of 1994 into including and accommodating those that were excluded pre-1994. It was an organization of businessmen in the lending industry. Remember at that time, it was called MLR. MLR standing for Micro-Learners Association. Later on, under the leadership of Maximo and Henny Ferreira, it was transformed from Micro-Learners Association, meaning Micro-Lending Association, into MicroFinance South Africa. The aim at that time, when we were talking and strategizing around it, was to move it from being seen as a consumer short-term payday loan organization into microfinance, meaning you accommodate development finance, unsecured loans, housing loans, business loans. It was the transformation. It was not a mere change of name. It was a repositioning of a solid base unit into a transformation agent. That is where we are now. It was turned into a transformation agent. It's obvious that such radical change was not easy. Just changing the name was not easy. Example, we take it for granted now that our rugby team is still named Springbok. But anybody who was there during those times, it was not easy just to retain the name Springbok. So some of the things are taken for granted now, but during that time it was not easy. Now let me fast forward. When I took over as the chairperson about 5-6 years ago, I told the board and my agreement with Henny Ferreira that we need to accelerate this transformation platform and this transformation name that we have. I said, Henny, you are left with 3 years towards retirement. This must happen. Now, we had to put 2 bullet points that had to happen. We had to stop any legal battles, including taking regulators, government, anybody to court. Everything has to stop so that we start negotiating with all the parties, from government, parliament, regulators, service providers. There is no budget for court, there is no budget for lawyers. We stop there. The second point was to transform membership so that it reflects the demographic of South Africa. You can see in the hall here, you can think that is the stadium of FNB between Chiefs and Pirates or the Springbok game. It has been done. The third was that you are left with 3 years. The true measure of leadership will be who comes after you and what happens after you. And we did that. The succession you can see in front, and that succession had to be at any level. That transformation from the chairperson, vice chairperson, board members, staff members, stakeholders, service providers, even our client base had to change. I can say in the 3 years, all those 3 points have been achieved 100%. If Henny is in the room, may we stand up so that we can salute you. He's not in the room. Or is he hiding? Okay. No, thanks. You can see now the inclusivity everywhere. Diverse in language, diverse in gender, diverse in color of the skin, diverse in age, diverse in expertise, diversity in geographic representation at every level. This microfinance is no more an industry of loan sharks, it's an industry that is the center of the transformation of the country. That is why I say some of those who say the Springbok is the most representative, next time please invite them to the conference of MFSA. MFSA led the most radical and far-reaching transformation of any key industry in South Africa. So when the new first female CEO of MFSA was elected and appointed last year, we had to come up with a new mandate because that one was done. We said in the first year, we need to deliver a conference that shall include those that are registered and legal, those that are not registered, that people call them illegal, call all the regulators all into one room so that we can chart a way forward and put a clear plan. We need to take this conference as a stamping block towards another renaming. Remember I said MLR, MFSA? I said, every time you say micro, not micro, M-I-C, not M-A, you give an impression that you are a small player, number one. And that's why sometimes people think that we're operating in the corners of the economy, not in the mainstream of the economy, doing predatory lending in the dodgy corners, charging illegal fees. I hereby request that all those that are here should really stand up and say thank you for pulling off the microfinance team led by Leonie, for pulling off that. Last year, this time, we thought it will never happen. Now the room is full, 22 service providers, 22 sponsorships, 500, half of them that were not supposed to be here. We have got people that are sitting here that are called illegal, sitting next to the regulators that are after them. We managed to put them into one room. May we please give it a standing ovation. This conference is happening, ladies and gentlemen. It is the biggest in our history, if not the first, and it's the first of its kind. People who study history of finance going forward will divide it into two parts. Pre-conference, this one, and post-conference. Make sure that you take photos so that when history is recorded, you are not missed. Let us make the best of it. We are moving from microfinance now to the non-bank lenders who are taking the center stage. For the first time, we have got funders, people who are prepared to fund loan sharks, coming into a room and sitting with them and coming to forward. It has never happened. It is happening today. You'll see them coming in front. We've got regulators. We've got lawmakers. Those that are complaining about rates and fees not even change, those people are in the room. Those that are saying you have been harassed by regulators, those people are in the room. Those that are saying the cost of compliance is too expensive, that is why I'm not registering, the regulators in the room. Those that are saying because you are in the business of selling money, money is our stock, I don't have money, the funders are in the room. So we are here to exchange strategic way forward, not for our business, but for our country. I thank you for giving me an honor of opening this historic conference. I thank you very much.
Thank you so much, Porky. We really do appreciate the opening remarks. So we are now going to go into our panel discussions, new opportunities and the future of microfinance, and Sophie will be leading those discussions. But as I stated in our AGM, the MFSA is busy with rates and fees research, and we have done consumer focus groups. So while we are preparing for panels, every now and then we are going to play you some videos of what these focus groups actually say. So Sophie, you can prepare yourself while I quickly play a video.
Behind closed doors and in the shadows, illegal lenders are preying on vulnerable consumers. These lenders operate outside the law, unregistered, unregulated, and without any consumer protection. They take your card and PIN, controlling your money with threats and fear. Interest rates, they charge 50, even 100%, far beyond legal limits. They do not perform affordability checks, trapping people in a cycle of debt. Without following the rules, they leave you in financial ruin, with no safety net. And when payments can't be met, they turn to threats, intimidation, and violence, forcing consumers into dangerous situations. Illegal lenders are breaking the law and putting lives at risk. Protect yourself. Only borrow from NCR-registered lenders. Report illegal lending today. MicroFinance South Africa is here to help. If you or someone you know is being exploited by illegal lenders, report them to us. Together, we can put an end to illegal lending. Stay safe, borrow smart, know your rights.
Welcome to today's panel on the new opportunities and the future of microfinance. It's a pleasure to be here with you all. with all of you as we explore what lies ahead for an industry that has had such a profound impact on financial inclusion in South Africa. Microfinance has always been a crucial tool for reaching those who are traditionally underserved by the formal financial sector. It has provided millions of people with access to credit, savings and other essential financial services. But the landscape is changing, and as we look to the future, we are faced with both exciting opportunities and new challenges. Advancements in technology and the rise of fintech and the evolving consumer expectations are reshaping the way we think about microfinance. Today we are fortunate to have with us a panel of industry leaders who will help us navigate these important discussions. Joining us are Mariette Igner, Director of Royal Finance, Brett van Aswegen from the CEO of Wonga, Naresh Gobichan, Director of Atlas Finance, and Leonie will be assisting me with the panel as we go forward with the discussions. Each of these leaders bring unique insights into the evolving world of microfinance, and they have been at the forefront of innovation in this space. Before we dive into the debate, I'd like to ask each of our panelists to introduce themselves and share a little bit about their background and their perspective on the current state of microfinance in South Africa. Once we've heard from all of our panelists, we'll get into the heart of today's discussions. We'll take some questions from the audience. I hope you have some questions for them ready. And so we'll see how can microfinance institutions continue to innovate and serve South Africa's diverse population while staying sustainable and compliant. How can technology, data and partnerships help us reach even more people and address issues like poverty and unemployment? I look forward to hearing the valuable insights each of you will bring to this conversation. So I think we should get started, and maybe let's give Brett a chance to introduce himself. And then once Brett's done, I think Mariette should have a go and Naresh at the end. Guys, you're next.
I nominate women go first.
You nominate me to go first.
I do.
Is my mic
Ladies
working?
first.
Is my mic working? There, it's working now. Okay. Hi, everyone. My name is Mariette, and I always say I've been in microfinance for 30 years. Not that I'm that old. My parents started when I was in grade 6, and being a family business, it's what I've known for almost my whole life. So we are Royal Finance, as I said, family business, and my brother and sister that is also in the audience today. And we have a passion for microfinance and for the people of South Africa. I think if you are in microfinance, a big reason for it is because you care about the people of South Africa. And I also have a passion for developmental finance, as was spoken about a little earlier, that we should pivot to microfinance in a developmental way. So I have a passion for that as well. We've been part of a pilot with FinFind, as that was driven by the IFC and the NCR in alternative data, and how that could help financially including micro enterprises specifically. So that's another passion of mine, and I always say I'm either stupid, naive, or brave to believe that we can make a difference in that space. I hope we are brave, and hope that we will still make a big difference in that space. So that's kind of me.
Thank you, Mariette. Brett, thank you.
Good morning, everybody.
Not on.
Do you want to go with this one?
Son. Okay, there we go. Good morning, everybody. My name is Brett. I'm the CEO of Wonga Online.
No, that's one, Jeff. Ella, let me give you this one.
Is this better? I can use it.
Yeah, here we go.
Is this better? There we go. My name is Brett. I am the CEO of Wonga Online. I've been with Wonga for just short of 10 years now. And I've been in the credit industry this year for 30 years, actually, which is scary to think. I started, my first job was working as an accounts clerk in Edgar's store. So I've done everything from receipting payments to being an account basher, running around opening up accounts. So I've also been there and done that. But you know, Mariette talks about the passion of the industry and what we do, and I think you have to have a bit of a passion for not only the industry but for South Africa if this is something you want to do. It's not an easy business to be in, but what I do believe is the power that credit provides to economic growth and to improving lives of people. And I know that there has been a lot of abuse that's taken place in the past. You know, certainly today there are still areas of abuse that take place. But I think when credit is run well and when it's offered responsibly and consumers are able to access credit, it's an incredible multiplier to an economy. Because it benefits not only the consumer but the corporate market as well, and it increases consumers' buying power, it increases investment for companies. This really does result in an increase in jobs and income for people in the country. So I think that, you know, given we're in the microfinance industry, there sometimes is a little bit of shame in that because of some of the past abuses. But I think that we're playing an incredibly important role, and particularly we're servicing the end of the market that many people are not servicing. And I think we have a very positive role to play in helping to build South Africa, because actually there's a large portion of our population who are underserved in this country. So, you know, that's my passion, and why I do what I do.
Brett, thank you. I think I just want to add on what Brett said. We are also the first line responders, service providers to our consumers, where they gain financial literacy on being able to work with a loan that will then advance into a further, you know, getting into a formal banking institution or something like that. You know, first-time borrower doesn't know how to work with finances. They'll go a long way getting into a financial world. Naresh?
Thanks, Sophie. My name is Naresh. I am a director at MicroFinance. We've been around for 30 years. This year is our 30th birthday, actually. And I've been there for 28 of those 30. Also a family business, and we all grew up in the business. And I would like to think that from my side, I made microfinance from a job into a career. And I've grown up in the industry. It was just the second job that I had. The first job was for a stationery company, and it wasn't going anywhere, so I ended up at MicroFinance, at Atlas. And I guess over the years, we've seen how resilient this industry actually is. Because I think a lot of the guys that I see in the audience today have been around for just as long as I have. And we've been through all the regulation changes, and we've been through the bad publicity, and we're still here, right? We're still here. There's a big role for us to play in South Africa, in the economy of South Africa and building this economy. So just as my fellow colleagues have said, that we're all passionate about it in one way or the other. And to see how the industry has grown over the years, in this last 28 years that I've been around, from writing contracts on paper to now this whole digital migration, which we'll speak more about as we continue with this panel discussion. I'm proud to call myself a microfinancier. Thank you.
Thank you, Naresh. I can just add, also being so long in the industry, I remember you saying one day we're standing at an ATM with card and PIN, drawing cash, and today the industry has evolved so much so that money is getting transferred from one bank account to the other. Transformation has been good, and it's come a long way from, I'd call them the cowboy days. Leonie, would you like to say a few words?
Yes, I love talking. So I've been in the industry for 15 years. I started as the communications officer. I actually studied journalism. And then I got a liking into the microfinanciers. You people are weird and wonderful, and you make me laugh, and you make me excited because you don't know the difference that you can make in South Africa. So I really look forward to what the future holds and to also these panel discussions. So I also want to motivate members to ask questions. Like when we have this panel discussion today, raise your hand if you have questions for any of us as panelists. If you want to ask Naresh something, or Brett, or myself, or Sophie, or Naresh, please do so. Right.
Okay, I think we'll give the audience a chance and see if there are any hands, if there are any takers for any question for any of our panelists. Anybody?
Not now.
Okay, I'll do it. Brett. Wonga has leveraged technology to transform its business model. What new technology trends do you believe will redefine the microfinance industry in the next 5 years?
Thanks, Sophie. Sure. This is a very broad question, and I could talk all afternoon about it, but I decided to pick just 3 things to share with you. I try to get my thinking specifically down to microfinance and into consumer lending. And so here are my 3 picks for the future. Number 1 is there's a lot of talk about alternative data in the marketplace and the use of alternative data, and it sounds amazing, and there are some really exciting types of alternative data that are out there. But I think the one to really look at is banking transaction data. It is incredibly powerful. I know that because I worked in a bank and I worked on a model to build scorecards, so I know how strong it is. And so I think the thing we need to see in this country is the advent of open banking. And I know this is something that's been worked on for the last several years, and for understandable reasons, the banks are quite anti this idea of open banking. They want to protect the data because it does give them an advantage. But I think that if you're trying to get down to use of alternative data to service unserviced markets where there isn't any credit data, this is probably the most valuable source of data that out there, by far and away more than anything else. So I do hope that we will be able to get access and that we'll see some regulations coming through to mandate the opening up of open banking, and for consumers through their consent can give access to their transaction data, not the bank's transaction data. So that's number 1. Number 2, I think having all this data is amazing. If I think back to my career over the last 30 years and the introduction of scorecards into South Africa, and I've kind of seen that whole thing happen. It's very much a static-based view on risk decisioning, and it's looking at a population at a point in time. It's building a risk model that predicts risk at a point in time. But I think if you look at where we are today with the availability of alternative data, the speed at which data is being updated, and some core things like computational power of computers, the ability, and people use these amazing words like big data and everything, but it's just about there's a lot of data and we're able to utilize this data in more real time. I think I'm not going to talk AI because that's a word that's overused, but if I talk about machine learning and using machine learning algorithms to compute all that data and making better decisions more frequently, I think is something that we are likely to see emerging in the next 5 years. And then the last one, and this is maybe my outside bet here, you know, it's like one of those horse racing things, and I'm sort of thinking if there's a wild card horse I'm going to bet on, I think the growth in instant payments. You know, you think of things like Apple Pay, Android Pay, now you've got Capitec Pay, maybe PayShap comes into the mix here. But I think this area of instant payments, I think there's a real opportunity for growth in the market and for people using this as a better way for collections. Because, you know, I know we've got this awesome debit check thing that's come into play and everybody, you know, it's great, but it's extremely expensive. You have a bank who is the master of this ecosystem that sets the rules for it, that administer it, who are also the competition to everyone else and setting price. You know, I think there's an incentive for some issues there. And, you know, if we just look at things, you know, what we've been seeing in the marketplace with, sorry, not disputes, but with suspensions, thank you, with suspensions coming through and how consumers are using this, taking a loan and then the next day suspending the mandate, like, that's not great, you know, and unfortunately, I think people are going to find ways to circumvent the debit check process because I don't think it's being impartially and independently managed. That's just my personal opinion. So I think you're going to see these other payment methodologies grow.
Thank you, Brett. And I think if I can read what you're saying as well is maybe a lot of streamlining in the payment space needs a lot of innovation, needs to come quite a ways. There's still quite a bit of work to be done in that space, if I'm right.
I'm struggling to hear your question, sorry.
We need more innovation in the payment space.
Yes.
Yeah.
100%.
Okay. Do I have any takers in the audience?
Thank you, guys. Gerrit from Moonstone here. A couple of years back, I've raised a question with the NCR, why don't we do nano loans? Because in the rest of Africa, there's this type of loan where the regulation is very limited. And especially talking today about the unregistered credit providers, the barrier to entry into the regulated market is actually quite high. If you look at your compliance systems that needs to be in place, the data submissions, anti-money laundering compliance, all of that. And I'm wondering, Leonie, from an MFSA perspective, if it isn't a possibility to engage with all the stakeholders to say, but look here, guys, we actually want to get these unregulated persons into the regulated market. But the current structure isn't working. So something like a nano loan, and my layman's term definition of it is to say, look here, it's a small loan, 500 to 1,000 rand. Instead of, we don't do affordability assessments for that. It's no longer, the repayment term is no longer than 1 month, for example. And you limit it in terms of the fees that you can charge. Let's say, for example, you don't charge interest, you only charge an initiation fee. I know some of the telco providers, they are trying to do that. And personally, we've had to, almost want to say to potential market players in South Africa or foreign market players coming into, to say, sorry, this is the regulation and they don't want to bring their business here. So, but to talk to Brett's point as well, alternative data in that type of market can also be a fantastic tool to actually score those type of clients. So I was just wondering if that's something that you guys see as a prospect or potential future as a subset within the micro industry. But yeah, thanks.
Gerard, I hope you can hear me. Can you just define what bracket that nano loan would work in? What amount are we looking at?
So, Sophie, to be honest with you, it's open for interpretation. I see it personally as a subset of a microloan or of a short-term credit transaction as it's stated in the Act. I would think no more than R1,000. It's typically somebody that needs cash quickly, either to pay for a taxi or to buy school clothes or whatever the case might be. But yeah, to make the access to credit quick and easy, and also profitable for the credit provider. And yeah, no longer repayment term, I would say no longer than a month, for example.
Thank you, Gerard.
Thanks.
Leonie?
I think that's an excellent question. Thank you, Gerrit. From our side, the biggest concern that we are sitting with is the cost of compliance and actually understanding compliance. So we've got these guys that sit in community areas, they sit under a tree, they give these guys credit, and they don't have the ability to comply with everything. But the risk is also not that big. They've got small loans, 50 Rand, 200 Rand, 500 Rand. So I think what we are discussing now, with different industry stakeholders, with different departments, is tiered regulation. And I think that is where tiered regulation will fit in. Kenya is a very good example of tiered regulation. So if there's a threshold for a certain product up until here, this is the regulations that you have to comply with. And it's almost like compliance light. But if you exceed that based on product, then you will have to comply fully. We're just seeing that when illegal credit providers come to the association, when credit providers that small come to the association, the cost of compliance is just too high and it's difficult to understand. So I think tiered regulation, discussing that with stakeholders is very important. But the Act needs to change, and that takes quite a while. But this is definitely something that's on our radar. Thank you.
Okay, do you have anybody else in the audience? Come, guys. Yep, thank you.
Thank you. My name is Elias. I'm actually from NS Debt Management. Actually, the question that I just want to ask is that with regard to a bank that is holding a merchant in terms of collecting funds from consumers, is there is the entity able to challenge that bank in terms of maybe to review the mandate that are being stopped and then the mandate that are being suspended, maybe to actually maybe ask, did they obtain a proper reasons, or either way to find out from the entity if what is the agreement and what is the duration of the agreement? That's my question. If maybe there's any challenge that can be imposed or it can be in place in order to mitigate the collection errors. I'm just looking at that one. I think that's the only difficult thing that we come across.
Any takers, Mariette? I think Mariette will answer your question.
Yes, mandate suspensions is really a big risk in our industry at this stage. What? I see someone raising their hand for the next question. Okay. So mandate suspensions is really a big risk for us. I mean, before we had ADO, which if the person put in a card with a PIN and said, please deduct the money from my account on these days, it was set in stone almost. They had to open kind of a case of fraud at the bank to get that mandate suspended. In that instance, the service provider would then be contacted and we would have to show documentation that this was a legit contract, and then they didn't suspend it. Currently, as you are saying, it is really a problem, and mandate suspensions, the percentage of it is rising. So I think that's really an unintended consequence of the new regulation around debit check. Debit check regulations comes from the Reserve Bank, and it is something that we have had on the radar from the MFSA side for a very long time, through the PSSF and so on. But it is, as we understand it, not a priority at the Reserve Bank and at this stage. So there is there is maybe light in the tunnel when it comes to just creating a little bit more friction in the process, because currently a client can go onto their banking app and just suspend from the banking app. So what we're trying to do is just to ask regulators to tell banks that just remove it from your app. Just don't make it so easy to suspend a mandate. But again, it comes back to competition, and these things lie with the banks, and we are also their competition. So it's a very difficult thing, but I feel your pain.
Hello. So if I can just add to that, the association that governs the rules around this is PASA, which is an association linked to the Reserve Bank, but PASA is the one that will determine the rules, and PASA is run by representatives from the banks. So I think that there is a lack of incentive to remove suspensions, and I do agree that there are some real cases where consumers need the right to be able to suspend a debit check. 100% agree, but I just don't think there's enough friction in the process. And it's very consumer focused and given the consumer the right to process the suspension, but there's no consideration for the other party to the transaction, being the credit provider. And for the credit provider to say, actually, no, this is a legitimate deduction, that I've gone through the legitimate process, registered it, done everything I need to do, and paid all the fees to get that debit order in place, and then to just have it suspended with no accountability for it, I don't think is correct. But, we are dealing with people who believe there are other more important things to deal with.
I wanted to just add one more thing. And the cherry on the cake for me is when the bank then suspends that debit check, they charge a fee for that. So, and I mean, it's been a long thing on big fees for NAIDOs that has been reversed previously and so on. And this is just a trend going on and on. So, yeah.
Just to conclude, I think mandate suspensions is there to protect the consumer, but it should go two ways or both ways. We should as a service provider or a lender also have some method or some type of protection. And we feeling left out in the cold. The system is being abused, and people are taking chances and just serially cancelling mandates with no repercussions for the consumer. And at the end of the day, us lenders bear the brunt. We had another question at the top.
Hi, good afternoon. Thank you everybody for this opportunity. My name is Emil Alexander, VP Finance. I just want to ask, with regards to the migration to online, I know, for example, Royal Atlas, you guys have got branches. Wonga, you strictly online. What's the trend that's happening now? Because I know with us, what we've experienced is people are still very skeptical with regards to doing things online because of fraud and all of that. What's the trend? Is there a big migration now? Are you guys closing branches and migrating also to online? I know Wonga strictly online. What's happening in that space? Are people accepting that these things are just happening online and it's going online? Or do we still need to have branches around as proof that you are an actual microfinance business? Do people take you seriously if you're just online?
Naresh?
I think we are seeing a migration to online. However, I don't think that the digital migration is just purely based on online. You know, it's about utilization of those digital platforms and how we are able to enhance the whole customer experience. And I think using that within our branches has streamlined our processes. So I think when we look at online, or when we look at the whole digital migration or the digital transformation, our first thought is always online. It's always somebody going onto the computer and trying to apply for a loan. But I think it's broader than that. I think we can use those same technologies within our branches. And we see it in our organization, how we have embraced this whole digital transformation in giving the customer the same experience that he would experience online, the seamless application process. And I think that's all we try, and we all, I guess, striving to achieve the same thing. So although there is a migration, I think, to online, and I think maybe COVID has kind of expedited that more people are going online. But I think there's a lot of guys who still like or rather would prefer the whole face-to-face interaction, the relationship building. I think that's still there, and I think that will still continue. And I don't believe that there's going to be a mass, well, for want of a better term, exodus from the brick and mortar to the online platforms. I think, if anything, the digital transformation can complement the brick and mortar process. Thank you.
If I can add to Naresh's answer, you know, is there growth in the online lending? 100%. You know, if you just think about today, there are more smartphones in South Africa than there are human beings. So, you know, that is a stat in itself that demonstrates what access to digital has done. And if I think back in Wonga, I started at Wonga in 2015, and at that stage, smartphone applications that were coming through from smartphone devices was sitting at around 25%, and today we're well north of 80% of our applications are coming from a smartphone. And a smartphone is an incredible device, you know, that's in the hand of a consumer, no matter where they are in South Africa. So it's a fantastic device for access. And so are we seeing growth in digital? Yes, we are. However, if you think about digital inclusion, what it doesn't cater very well is for human interaction, which is to your point, and particularly psychological safety. So if you're thinking of consumers, and particularly the most vulnerable consumers who are needing some assistance in processing a loan application, like our service doesn't work well for them. You know, it just doesn't work. But if you're thinking about being able to talk to an individual, help them through the process, providing the education that happens on the ground in their mother tongue, you cannot take away the need for a branch network. And I think as we're seeing banking institutions shutting down branches, I think it's this industry that is going to pick up that slack.
Thank you, Brett. We had a question. Where do we get those? Try again.
Vusi.
Here we go.
Hi, it's Vusi. I just want to check, especially on the online microfinance space, how do you manage the risk there with regards to application beyond the normal affordability assessment and the rest of the stuff? Because we are in an industry that is very risky, and then being on an online space, especially in South Africa, where you have misrepresentation and things like that. I'm just asking
how do you able to manage that part?
Who wants to take that?
It's complicated.
That's
So, can I just say, like, I used to work for Lewis Group, the old furniture retailer, and we had hundreds of branches, like I think over 750 odd branches. I have a huge amount of respect for people who run a branch network. It's damn hard work. I'm terrible at it. I cannot do what you do, managing a branch infrastructure. Technology is different. And I think that, we've had to really specialize in what we do. And, I say to people, what we do in digital lending is like, we don't have a storefront. We don't have customers walking past. And so we have to think only digital, and how we operate is like we're single-minded about it. And we've had to really build up our skills in certain key areas in our business in order to be able to do what we do. So, I just want to preface my answer with that, is that it's not something that you just want to say, oh, I'm going to become an online lender, and where do I switch it on? It's complicated, and a lot of investment and work and specialist expertise have gone into building our platform. To answer your question, so just to give you a sense of what we do, we obviously integrate technically with a lot of different data providers. So we naturally have the credit bureau, and we get a lot of our information around risk, how people are behaving at the credit bureau, and their affordability are key checks for us. But then we also do things like we integrate with, sorry, I'm trying to remember. This is the problem with getting old, is you lose that short-term memory a bit. But there's a tool that we use for fraud detection. It was the company's recently, or a few years ago, was acquired by TransUnion. And the tool allows us to identify the specific IP on the person's device. We can see if this IP has been used multiple times, or there's high velocity. So if people are in internet cafes, we need to be able to identify that, and those sort of things. We also use, we do direct integrations with the banks to do account holder verification. So and then what we're doing is we are validating between the person's mobile phone that they provide, the data we're getting off from the credit bureau to validate the consumer, who they are, and the account that we're paying into. We validate from their ID number and their mobile phone, that we've validated as well with an OTP. So we're doing all of these multiple validations to triangulate a whole bunch of information to say, this is a real person, I'm paying money into Vusi's account, and Vusi's doing the application with me, and I've got Vusi's mobile number. And so when we're paying money into your account, we've done all of these things. And so it is a very technical system to build, but that's what we've spent the better part of 10 years trying to refine.
Just to add to Brett, there's obviously a lot of nice technological solutions to problems, but obviously this technology comes at a cost, and it's not cheap.
No, 100%. But I think if you consider the cost of running a branch, I don't have that cost, and all the people that goes with it, etc. So it's a different cost model.
Yeah.
Yeah.
Have we got any more questions? What's up?
This is Matemo from Exact Financial Services. I just wanted to ask what the purpose of credit agreements really is, if a client can easily default and we don't have, or rather, what laws protect us as an industry to be able to get our money back after we obviously give it to clients. If it's so easy for clients to go to a bank and suspend mandates, which part of the law protects us as an industry? Because I think it also goes back to what Naresh was saying about the resilience of the industry. How resilient will we still be as an industry if it seems like there's various aspects of the industry that make it so difficult to be able to operate still, because it means we need to put in additional resources to regain back the money that we've already taken out. It means now that's additional cost on top of the compliance that we need to pay for. It really is making it very difficult for us to work in an industry and also be compliant as well. So really my question is around the laws that protect us as an industry.
Mariette.
You guys are asking all of the right questions today. I love it. So that is one of my passions as well, and I believe one of our biggest risks in our industry currently, and going forward it can become even, you know, it will snowball. People know that if I don't repay, nothing's going to happen to me. Nothing can go through courts these days anymore. Our loans don't go through courts easily. Then if the court will do nothing after 5 years, it will just be off my credit record. So, you know, there isn't really a lot of recourse. You are asking exactly the right question, and that's something that we should really focus on. It's important for regulators to understand this as well. Previously, before the Stellenbosch case, we could get judgments on our loans. It was possible to get through a court and so on. Then there were people, yes, that abused the system. But now, because of that abuse of a percentage of people in the microfinance industry, all of us are punished. And none of the loans, or we don't even try the courts anymore. I don't know if you guys try the courts, but we don't even try it anymore because it's just a waste of time and money. So I believe that is a very big risk for our industry and something that we should really talk about. Thank you for the question. Sorry, I don't have an answer. We need to talk about it more. That's my answer.
I actually want to add on that. When we did our focus groups, one of the consumers actually said that, in 5 years it's going to be written off, so I'm not going to pay it in any case. But with the Mashonisa, it's not written off. They go to your house, they fetch everything. So that's why we see credit providers are turning to the dark side, because for them, it's better to collect their money in a very bad way. The recourse for our industry is concerning. And now taking the rates and fees into consideration and the fact that it hasn't been reviewed, you know, your risk, the risk that you are taking, it's just not worth it anymore for credit providers. So we are seeing credit providers in the rural areas actually exiting the market because the risk is just not worth it anymore. I think this is a major concern. We are also speaking with the Association of Debt Recovery Agents to see what can we do to ensure that it is a fair practice, fair credit, but also a fair collection mechanism. So thank you so much for raising that as well.
Question on the top there.
Thank you very much and good afternoon. I wanted to ask the gentleman who spoke about the fraud detection tools, I think it's Brett. What are some of those tools, Brett? And I'm asking because one of the things that we are really facing now as up-and-coming microlenders is those fraudulent applications, fraudulent bank statements. It's really, really, you know, becoming a challenge to the point where one finds themselves using so many separated systems to try and manage and mitigate that risk. So if we could just get a little bit more information around the fraud detection. And as a follow-up question, are there any mechanisms in place at the moment to work with the banks in managing that fraud that is taking place? Because clearly, okay, maybe this is an allegation, but it seems as if there's some collaboration between fraudsters and financial institutions, considering how smart they are becoming and how, you know, they're managing to bypass our processes. And then one last question. debt collection services, are they even worth it? Or should we cut our losses and move on?
Okay. Naresh, would you like to answer the first question? Or we'll
Ready to go on the digital.
So I had to just double check my team. Thank God they know that I've got a memory problem, so they help me out a lot. So the name of the tool that we use is called iOvation. So it helps us identify online transaction information about the devices and frequency and use of the devices that we have. In terms of your question around fraud detection, it is a difficult thing to do. What I'll say to you is that our validation process that we do actually eliminates a huge amount of fraud in our business. If I was to talk to you about like what is actual fraud, our fraud rates are roughly 0.4%. So it's, we manage it on that basis to a large degree. And where we do see fraud taking place, it's typically the consumer who is participating in fraud. They're using their bank account and the money's being paid into their bank account and they're okay with that. Now, is that fraud or is that just intent not to pay? And what's the difference? So for me, when I think about fraud, it's when I am pretending not to be Brett, to be somebody else, and that you can't find me. And that's where I talk about real fraud, like that's kind of what we think about it. And that's the other one is just bad payment behavior. So, we see those coming through in our never paids. They take a loan. These are the guys that will cancel their, suspend their debit check mandates immediately and not pay you. It is bad debt in a way, but you're dealing with the right individual and it's not a fictitious fraud that you're seeing. What we have been doing though, like on the payslip component, just to share with you, is we're busy building our own tool to read in bank statements. And there is so much information that you can gain off a PDF bank statement, and we've been spending better part of a year busy developing the solution that we're building. And there's information such as, when people create fraudulent bank statements, there's just so much little key pieces of information, such as the banks have certain formats of their bank statements, depending on whether it's printed in the branch, online, emailed, but there's a set format. And then they'll have things like the bank's NCR number printed at the bottom. Is it printed in the same place? Is the number correct? You start picking up some of the metadata off the bank of the PDF. You can tell whether a PDF has been tampered with or whether it's an original PDF from the bank. So there's so much background information outside of just the statement itself that you can help you identify if this bank statement has been tampered with or is fraudulent. And then you've got things like Capitec have introduced their solution through their partner. Again, it's this memory thing. Sky QR, thank you very much, Sky QR, so you can validate through the QR code that the bank statement is valid, but that is, they're charging 20 Rand per validation. How on earth does a credit provider that's earning the fees we're earning pay 20 Rand alone just to validate a bank statement? Not validate the income on the bank statement, to validate the bank statement. So, sorry?
You haven't even granted the loan yet.
No, totally. So we were using Sky QR. We've stopped it. It's just not worth it economically. We can't afford it. So, what other question did I not cover for you? Oh, debt care collectors, are they worth it? 100%. I think that there's definitely a place for it, for debt collection. It is a necessary machine to try and recover your debt. I certainly, unless you can afford to just write it off, we're not there. So we do still use them.
Thank you, Brett. Ladies and gentlemen, we're running out of time. We could be chatting on this topic for a while. And I have to close off. And I'm going to take this last question How are more established microlenders helping smaller players in the industry to get access to the market, such as partnerships with employers offering credit services to the employees? Do I have any takers? Naresh?
How are more established microlenders helping smaller players? So I think it's a difficult one, this. Yeah, so I think it is a difficult one. I think it is from established microlenders. I think for us, if I can just talk on our experience, right, that we would like to see the industry grow. We would like to assist where we can. But the challenges that established microlenders have are similar to the challenges that every other microlender has. It's just that we are able to maybe have a lot more resources to kind of work through them. But what we've always maintained from an Atlas Finance point of view is to keep relationships within the industry. So we are always open to building those relationships with other microlenders. And I think there's a lot of guys in the audience here that we have relationships with, that we kind of bounce ideas off, that we speak to each other, and also kind of meet on a regular basis to kind of just touch base and see what's going on and how we can exchange ideas. Because we can't address all these issues on ourselves. So we got to make sure that we have these collaborations. So, and we're open to it. We're open to exploring ways to work together to move the industry forward. So we very much, you have this saying, you have an open door policy, but we are very much open to people calling us, asking us these questions. How are we addressing different aspects of microlending within our branches, fraud, affordability, and we exchange ideas. So it's very much a broader topic, but we are definitely available to assist. My information is available on the MicroFinance website. So if anybody wants to call, please pick up the phone, call, and I'm happy to share our experiences and assist where we possibly can.
Thanks, Naresh. Just something to add to that is, last year when we were busy with our BE audits, we have one of our criteria is social economic development, and the consultant said, so you need to do some work to help somebody in your industry who is, part of the transformation program. And I was like, where do I find this person? We're happy to help, but where do I find them? And so I think, with our focus as the board, looking at transformation and the role that the MFSA can play in transformation in the country, I suggested to Leonie that we maybe want to try and create a sort of a BE-focused opportunity or transformation opportunity that companies who are trying to fulfill their BE mandates can actually tap in and assist. And I think that there's many ways in which we can assist, both financially, but also particularly in the space of skills transfer and helping smaller microlenders get a start and providing that sort of guidance. Because, we do have a role to play, and there is an opportunity for us to give back to the industry. And I think that's a great place for us to potentially look at starting.
Yes, just a last point on that. As you know, we are an expanding business, and part of our expansion is also buying new businesses or buying businesses, existing businesses that are looking to get out of the industry. And I actually had calls from other microlenders who want to do the same. And how would they go about evaluating a business that they want to acquire? How would they go about making a payment option to the microlender? How would they go around assessing all of that? And I'm not saying we're experts at it, but we have done it for many, many years. So even those type of if that's advice that is required, we're open to that as well. So we very much like to think that we are more collaborative when it comes to these things. So we are definitely open to that.
Okay, I'm on to conclude. I'm going to allow 2 questions. I think we're going to deal with this one on the screen, and then a last one for Mariette, and we will conclude, unless there's a pressing question. I'll get you the microphone.
Sorry, I just want to confirm, I found Jack in 2011 and he helped me to set up our cell captive. So it's true what he's saying. He will help.
Okay, so next question we have. As a family business owner, should I include my children in the business or let them pursue their own ambitions? Or should I let them go and study a course that is in line with business cash flow? What courses can you recommend, Leonie?
Yo, that's a difficult one. So I feel if it was my children, and you can't push somebody into a direction. They have to have a passion for this business. So it grew up in this business. She's got a passion for it. Her parents did it, and that's how she liked the industry. So from my point of view,
Just wanted to say on that.
yeah.
Just wanted to say on that I studied economics at University of Northwest and so on. My parents never asked me to come into the business and so on. I actually at some stage asked them, okay, now I'm ready to join. I thought I was not going to join because people don't like loan sharks, right? If you're a microfinancier, you're a loan shark. So I didn't actually want to be in this business because people would perceive me as a loan shark. But when I worked in branches and I saw the real need of the consumers, that's when I decided, even if it's going to be difficult, I'm going to do this and I'm going to try and change the perception. So you need to have a passion, sorry.
So from my side, if I had children in the microfinance industry, I would definitely introduce them into the business. One of the courses that I would definitely recommend is, if you're not doing a degree in economics, is the International Executive Development Program. It's offered by the Bank CETA. It gives you a diverse perspective of what's happening in African countries, what's happening in South Africa, what's happening in Kenya, what's happening in Uganda. It also focuses on consumption lending, development lending, and from that, if they've done that course, that it will widen everything for them. So introduce them to the business, let them do the IEDP, and then take it from there.
Thank you, Leonie.
International Executive Development Program.
Okay, ladies, I'm going to have to conclude. I need to ask the last question. We haven't touched on developmental credit. It's a topic that's very close to Mariette's heart. And I think we'd ask her to elaborate a bit on developmental credit and where you are at with it, and the learnings from what you've done as a part.
Yes, I saw a question coming up. It's not being displayed right now, but I can paraphrase the question. It was around what our learnings were during the pilot with the World Bank. On developmental finance, specifically to micro enterprises. So it's the small businesses. We gave loans to a guy, his name is Amos. He sits under a gazebo and sells buckets of chicken food in 1 kilogram, 2 kilogram, 5 kilogram buckets. Those are the kind of people that we gave loans to. What are our key learnings? Well, I think the most important one, it is possible to give loans to these people with the help of technology. So we didn't ask them to come into a branch. We did everything on their phone, the whole application process. Because remember, for these people, time is money. If they are out of their business, they are losing money. So they could sit in their business and apply for a loan. The whole application process was done telephonically. And then the repayment, remember that very bad load shedding time of 6 months in South Africa. So before that, our portfolio at risk was only 0.5%. They were repaying so good. And what we've learned out of that was that if people have the ability to repay, they will repay. It's not a sense of, a lot of our consumers, they just don't want to repay, right? So they can repay, but they just don't want to, so then they don't. But in this industry for micro enterprises, because they know nobody else is going to help them to build their business, they do want to repay, but then when they didn't have electricity, they couldn't. They are repaying now again, but it was a difficult time. So 3 critical challenges currently in this market. I'm going to summarize very quickly because I know we are out of time. But the first thing is there's no clear how-to guide. Microfinanciers, and I think a lot of you here are asking the questions, how do I register for developmental credit at the NCR? How do I vet a client to know if they're going to repay me? How do I do an affordability check for them? How do they actually repay me? Because they're not getting money into their bank account. And what can I do if they don't repay me? So there's a lot of questions and uncertainty. And I think if there's a clear how-to guide on this, that could help a lot. The second thing is regulation in South Africa, and I also completed that IADP that Leonie spoke about. Other African countries, regulation is really set up for success for developmental credit. In South Africa, we're having a little bit of a problem with that. The National Credit Act, there's a few things that's causing a difficulty, which I think if it can be addressed, it can have really good impact. The first thing is there's a very scattered approach in the National Credit Act for developmental finance. There's no one area to read about developmental finance. Everything is like, this is how you do it for normal finance, and developmental finance is then here on the bottom, and then you need to read here a piece and there a piece. So it's very scattered. Brazil has a very good act for developmental finance. I think it's 13 pages, and I don't read legal, and even I could read it. So, something like that I think would go a long way in South Africa. Different ways to prove income, that's going to be, and allowing different ways to prove income for affordability checks, that's very important. Mobile money regulation is currently too restrictive. We really need to look at mobile money regulation and, why M-Pesa they wanted to come to South Africa and they tried, and then, it wasn't a success. Why is mobile money everywhere else in Africa doing so well and not here? And it's too strict regulations. Then there's no recourse for the lender if the person do not repay. Other African countries, the regulators set up a collateral register saying, okay, you as micro enterprise, put up your fridge or whatever as collateral, put it on this register, and a lender can then see, okay, that fridge has already been put up as collateral. Don't use that fridge, use something else. But that promotes financial inclusion in other African countries. And then the rates and fees for developmental credit is lower. It's set up so that the percentage reward is lower on a higher risk loan for bigger loans. And that model isn't really working well. Then the third thing, and this is the last thing, I think there's a need for specialized funding. There's currently too much red tape when it comes to funding for microfinanciers in for housing finance or micro-enterprise finance. Patient capital is needed. I think that's probably the biggest thing we've learned out of this, especially in extraordinary economic circumstances. And then also a credit guarantee, again, in extraordinary economic circumstances can go a long way to promote financial inclusion, yeah. Good.
Mariette, thank you very much. I think it's a very needed funding model for our country. It would go a long way for our SMEs. Hopefully we can make some inroads with the red tape and regulators. Unfortunately, I'm going to conclude, otherwise we're not having lunch. Would like to thank our panelists, Naresh, Brett, Leonie, and Mariette, and the audience for partaking. Thank you very much.
Thank you very much, guys. I think while we welcome the next panelist, you guys can go off. Thank you. I'm going to play us a video on our focus groups, and I want to welcome on our funding panelists, Jason, NHFC, STIFA, and Finbond. You guys can come up to the stage, please.
But if for people who've never seen a Marshals, who would they typically be in the community? Who's your uncle? He's got an uncle. He's got a pool, he's got children, he's got 2 kids, he has a wife, his wife did not come in, so they go to church. Yeah, they husbands Christian wives more so. Okay, but they speak the religious, they have family things over, they cry, they think. So it's a set of people. And they even have a semester time, they don't put themselves out there. But like I said, they're all committed. So there's no beer parties on a Friday. There's no big And your now?
My thing is, she's a lady as well. She's working. She has kids. She does this normal house. It's extra money for me. Extra money.
And some of the Marshals that you guys know?
Regularly. Just friends.
Friend, you were saying these summer jobs. What kind of jobs do some of them have?
Because normal jobs, call center, the job data, government.
Oh, yes, it's that.
Okay, we want to welcome the panelists. I think this is a very important panel, and it's called Utilizing Funding Opportunities to Achieve Financial Inclusion. Now, funding is very, very important in our industry, and I think we've never had access to funding. So the first thing that I'm going to do is I'm going to ask each panelist to give a 3-minute introduction of who they are, where they come from, and how they can help our members. Jason, let's start with you.
Are we live? Can we hear me there? Yeah. Okay, guys. Yeah, so I'm Jason Carlisle-Kitts. I'm the CEO of Cash Converters Personal Finance. 30 years seems to be a common trend in the panelists today. I too have been in the industry 30 years. Unlike Mariette, I wasn't in grade 6 when I started. I'm much older than she is. I had finished university and traveled around through Europe and the UK and came back to South Africa in '95 to watch the Springboks hammer the All Blacks, which they've continued to do, much to my joy. And South Africa was in a state of flux. The constitution was new. Nelson Mandela had been released from prison, and it seemed to be a great place for a young guy to get going. I happened on the micro-lending industry or money lending by chance and started in the little town of Pietermaritzburg in KZN with an old dining room table and some garden chairs. I've been so fortunate in the journey that the micro-lending industry has taken me on. I'm humbled at the opportunities I've had. I mean, as a youngster, literally 24 years of age, I was sitting with the then MicroFinance Regulatory Council. I'm giving them my opinion on what legal contracts for the micro-lending industry should look like. We fought around payment systems and argued for credit bureaus. I think one of the service providers is here. I was customer number 007 or something like that on one of the credit bureaus. The regulator, the National Credit Act, came into being. Again, as a 30-nothing-year-old guy, I was involved in working groups and workshops with the regulator on promulgating the Credit Act, and the need for the National Loans Register. I've had opportunities to work with the banks in financial inclusion, Standard Bank, Absa Bank, opening accounts in rural KZN. I'm also, as Mariette is passionate about, involved in a developmental credit space, quite an exciting piece in the education space. And yeah, with the challenges that are facing the industry at the moment, we believe as cash converters we have some solutions to particularly this financial inclusion piece and some of the other challenges that the industry is facing. But yeah, Leonie, a unbelievable journey, so much that for me to take out of it and so much to look forward to. Thank you.
Okay, thank you very much, Jason. Those that cash converters, I think we are privileged to have, it's a new phase now, cash converters. Most of you know about it. Maybe just before we get to the other panelists, just clarification question. One, I know you give short-term loans and you lend against pre-owned goods or something like that. Am I right? Okay. Because it looks like yours is better, because we get in the videos, they say Mashonisas come and knock at our houses, take furniture if we don't pay. You take furniture before you give a loan. Am I right?
So absolutely. We're solving the problem before it happens, so to speak. We're in a very unique situation as pawnbrokers where we have a second product. And as you guys know, everybody's tightening up the risks, or the appetite for risk, so to speak, by virtue of the increasing costs that are happening out there. We've heard debit checks expensive, we heard rents going up, and. So we can afford to tighten up our risk appetite in the unsecured space because we have this second product. And the second product, particularly from a financial inclusion perspective, allows us to lend to the likes of, let's say, people who haven't been involved in the credit world before, thin file customers, people from the informal sector, small businesses who have had no real transaction history or can't provide any of the necessary documentation that the banks and the formal institutions require. Our commitments or our obligations to the Credit Act don't require us to do an affordability analysis. So we don't need a bank statement, and we don't need a payslip, and we don't need a credit check. We conduct our, if you will, affordability assessments in inverted commas against the item that we're going to lend money against. And as a result of that, we don't have bad debt, because we have that item. If our contract comes to an end and our customers haven't come back to redeem their item, we're in a position where we can sell the product. And as Parky says, we don't come knocking and take TVs and the rest of it. People bring them to us. So we believe that's quite innovative, although the pawnbroking industry is probably 3,000 years old. There's three of those long-standing old industries: money lending, pawnbroking, and we won't talk about the other one. But yeah, it is, you know, having been in the industry for so long and having tried to get involved in the groundbreaking pieces that help us overcome these challenges, I believe that with the combination of the two products, the unsecured and the secured, it's definitely a way forward and a way of the future to resolve a lot of these challenges and talk to a lot of the problems that have been spoken about in the first panel discussion.
Hello? Hello? Sorry, can you hear me?
Yeah.
Okay. Sorry, just excuse my hearing isn't very good. I'm Peter de Wet. I do not really like talking about my background, etc. That is not, I just want to talk about opportunities. That's more important. But in brief, my background is I'm an economist. I used to be in the formal investment sector, manage funds, private equity, offshore investments, etc. And then in 2018, I took a 2-year sabbatical where I traveled emerging markets across the globe to see what other developmental needs there are compared to what we have in South Africa. And I came back and started focusing on how to implement everything that I learned. And end of last year, started working at Finbond Mutual Bank as strategic manager, implementing all new strategic initiatives in order to further diversify the bank's offering, as well as see where we can assist to be a development catalyst for the greater community and region as well. That's me, yeah.
I think you talked about yourself, not what you are offering. I think the loans to micro lenders, Finbond. I think you talked about your background and what you are doing as Peter de Wet, not about Finbond offering.
Well, with regards to the offering, we can talk about it in specific detail as well, or if this is just the introduction, but we are making a strong pivot towards providing funding for microlenders in the industry. There's certain criteria. They should be regulated, certain aspects of the underlying book. Depending on what the questions are, we can go into detail on that. Since the beginning of this year, we've already allocated, yesterday we allocated another 35 million rand towards this in South Africa, and our goal is to grow that to 300 million rand by the end of next year. Yes, Finbond has a history itself of being a micro lender, and then developed into a mutual bank itself with all the offerings of a normal bank. The reason why we're going into this micro-lending space to support the micro-lenders out there is because we think we've got a competitive advantage compared to the other funders in that we know what industry you guys are playing. We know what you're struggling with. We know how to assess a book and the health of your books. We know how to assess the region where you are in, if it's a good one or not. We know how to assess if you're doing a good job or not at what you're doing, because we've got strong teams doing it ourselves as well. And that is an advantage that we've got compared to the other lenders. And because of that, if we do a risk weighting and a risk pricing, we can actually reduce the price because we can deal with that risk ourselves in our evaluation process by just having such a strong understanding of the market you guys play in.
Okay, no, thanks, Peter. Just to make sure that everybody understands, let's not say a micro lender giving loan to another micro lender. It's a mutual bank giving a loan, mutual bank specializing in micro lending, giving a loan to a micro lender. I think it's the same thing, but let's color it properly. But before we leave, I know as a micro lender, we might say, why do I go and get money from another micro lender, mutual bank? Are they not going to steal our clients? And I might not taking my business to them so that they can give them bigger loans. I think that could be another fear. Let's just clear it before we stop, Peter. That they become, as a micro lender, coming to you to get funding, the fear could be that you are going to take my business or my clients. Just answer that.
Yes, no, I understand. It's a few ways to look at it, but if you buy a Mercedes-Benz at the moment, the steering wheel is made by Chrysler. Chrysler is one of the strongest competitors of Mercedes-Benz in the US market. But Mercedes can get those steering wheels more efficiently and better priced from Chrysler, so they don't develop it themselves. That does in no way affect Chrysler's competition with a Mercedes in that market. It's just about efficiencies. We see the market as pretty uniform, and it's a commodity. You guys are selling products, and your product that you sell is money. Okay, if someone is going to borrow 1,000 rand at my store, or they're going to go down the road and borrow 1,000 rand at the same terms there, it's up to how nice my store looks or where it is situated, as long as both are regulated. But in the same instance, I do not want the people to go to the unregulated guys out there where they do the horrible things of taking your bank cards and, I don't know, taking your firstborn right and bucky lenses and whatever you've got. So I might as well support the other guys in the industry because I've got capital to deploy, and by no means do I want to take your business away. We know the underlying environment is strong enough. I mean, if you use that argument, why do we have a conference of all microlenders together if you're all just going to take business from each other anyway? So why should you sit next to each other? So using that argument, I just want to say we are not here to take any business away, but to support an industry that's well regulated, well managed, and well functioning.
Thank you very much, Peter. So before I get to my, I think it's clear, not some of the questions will come from the floor. It means on my right, before we go to my left, on my right, you just ask your client, bring the fridge to my office. Peter will fund, and then we can expand without any constraints. If they default, Jason said is 0% default rate. It's a thin file, doesn't have history. So I think you are right, Peter. This is where you collaborate and exchange ideas. There you are on the right side. Can we give them a round of applause? Thank you, gentlemen. On my left, can I get to government institutions? Can I start with small enterprise funding? Thanks very much for coming. It has been a pleasure. We know each other for the past 25 years, but I'm not yet gray. Thank you very much, Olivier.
Hi, I'm Olivia van Rooyen-Henwood, and I work for SIFA. I'm responsible for the microfinance and cooperative program in SIFA. And I know your interest here is around microfinance. Now, SIFA do not give small loans under 250,000 Rand directly to the public. That program is run through a wholesale program, and that's the microfinance program that I head up. So typically we then act as a wholesaler to microfinance institutions that act as the retailers. Typically over a period of 1 year, we are able to reach 90 to 100,000 micro enterprises that are in turn the clients of retail institutions. The typical loans, so in my space, the loan at the end user side is within the limits of the National Credit Act, therefore under 250,000 Rand. However, most of our loans at the moment is under 20,000 Rand to clients in rural communities, and those are mostly your classical Grameen-based model of rural group loans, right? We have a couple of very important strategic objectives in SIFA. 100,000 is just not enough and is never ever going to change the landscape and assist us to achieve real economic development. So we need to double, triple, and probably 10 times more entrepreneurs we need to get access to, and that's why we are here. We have a kiosk outside here. Please go there, let's get your name, let's get your email address, and let's get in touch with you to talk further. A lot of our growth over the last 3 years have been achieved by us working with people that were historical consumer lenders that are now switching into enterprise lending, right? And it is, and however, we are the state, right? We are SIFA, the processes is sometimes long, the processes are sometimes tedious. So I'm not promising you a bed of roses, I'm also telling you it's not always easy. We are incredibly thorough in our due diligence process, but we are also very proud to say that the microfinance portfolio within SIFA is the best performing portfolio. So quite frankly, it's quite interesting that the portfolio that's working with the poorest clients are actually performing the best, right? Very much borne out by the experience of the previous panelists that said, yes, sometimes the enterprise goes into distress, but the enterprise would be in a period of distress and thereafter recover and start paying you back, and that's what we're seeing too. We are also strategically, very importantly, moving away from saying we are a lender only, we're giving finance. The reality is we are seeing our role very importantly now as institution building. So we want to establish a relationship from SIFA with a microfinance institution over the long period, building that institution's capacity over time. So sometimes we feel we have even more ambition than our clients ourselves. So we're not into short-term dating. This is not about speed dating, one-night stands, none of the above. This is a long-term relationship where we will onboard you and develop that relationship over time. We are interested in seeing business plans that saying, yes, I'm taking 3, I'm taking 5, I'm taking 15 million rand from you right now, but I want to be able to come back and over a 3-year period, build a loan book of 150 million rand. Very often, SIFA's clients also sort of graduate from SIFA, where SIFA was the first external investor. And then that relationship grows and the client might go on to PIC or IDC or whatever else. And PIC and IDC, for instance, sees SIFA as a very important base client to start building those relationships. And typically the products we have on offer is a term loan. And that term loan is, we started off with 5 years, we realized 5 years don't work, we need to go to 7 to 10-year term loans over time, prime related. The other product that we have that works very, very well is also a revolving facilities. So it's possible to have both a term loan and a revolving facility because we see in the microfinance industry that there's certain seasonalities over Easter and over Christmas time where you actually need to access an additional sum of money over a short period of time, but you do not want to sit with a long-term term loan. You want to pay the money back to us and come back in 6 months' time and access the funds again, right? Okay, so it's a term loan, it's a revolving loan, and recently we started to introduce structured finance facilities. And a structured finance facility is often aimed at people that didn't before do credit. And it's sort of your credit 101, your preschool of building yourself up to do credit. In a structured finance solution, we basically, you find the clients, you prepare the loan application, you bring the loan application to SIFA, SIFA funds the client directly, and you get paid both a fee for bringing the client on board, and thereafter you collect on a monthly basis a portion of the installment as the loan goes on. Structured finance solution we very definitely see as a start of a relationship, but that's not necessarily where we aspire the relationship to remain at. We want you to become a lender and to support you in the process. We are also beginning to look at equity, and that equity not be something that you default in the relationship because there's been the institution is in distress, but actually that we make equity investments right from the start because we've got a long-term vision with where we're going to. Thanks.
Thank you very much, Olivia. If I summarize it, it means micro lenders that are here, they can come and apply for funding, which can be just one of the products. But that money must only be used for business loans, not personal loans. Am I right?
We manage that with Helen Brimstone. So do not think that one can do 10,000 loans and you can hide 8,000 consumer loans in the pack. doesn't work like that. Thanks.
The other one you mentioned, structured finance, meaning that I will say, I don't want money from you, but I'll bring clients so that you can fund. Am I right?
That's correct, thanks. And often with that, we work with training institutions that might be training people in a particular industry, so they've got experience with building the entrepreneurs, but then the entrepreneurs come out of the system without access to finance, and we then come in to assist the entrepreneurs to access, to purchase material and equipment to get going. Thanks.
And then my last one, you mentioned equity. I can come to you and say, I'm offering you shares in my business, then you'll invest equity so that we can build it up together. Am I correct?
That's correct, thanks.
Those that want to sell their business shares to CFA government, there you are. If I want to, because Jason's business model is very exciting. Maybe before I get to William, let me get this one. Jason, do you offer franchises, paying for them and so on?
Yeah, so from a financial inclusion perspective, first of all, we have a project that we've embarked on with our sponsoring bank who are enabling people who historically haven't been able to access funds to get into a formalized business, together with ourselves, to enter into a cash converters franchise. So they'll get the funding, provided they have a small amount of money to buy into the business. Our business is obviously a turnkey solution, so it from start to finish, right from the accounting, from the IT equipment, from the store build-out, product supply, the whole lot. We do literally the whole lot. Once that the franchisees are in and operating, we have a wholesale funding model where we're not McDonald's. We don't have burgers and sauces and buns that we supply to our franchises. We supply cash. So give you an example, franchisee comes in, he's started up his business, is up and running 6 months in, and cash flow becomes an issue. We as a franchisor step in and we help fund literally transaction by transaction, switch on the funding, switch off the funding when you do and don't need it. It's intraday, intra-transaction. So whenever you need money, your franchisor is there. Literally Friday afternoon, banks are shut, overdraft is exhausted, cash, there's no money in the till, flick the switch and we'll fund the transaction. So that's our wholesale funding offering that we provide in conjunction with our bank, and trying to include people who historically haven't had access to funding to get into the business.
I think you have a mic on you. Before I see there's a question, thanks very much, Jason. Before I get to why I asked you that question, does CFA offer loans to intermediaries? I think it was said yes. My understanding is that I'm looking at intermediaries. CFA is a wholesale lender. Are there terms and conditions? I don't think it's a blank check where you don't sign anything. You must definitely sign something. Okay. The reason I asked Jason a question is if some of my members sitting here or non-members, they want to buy franchises of cash converters, can they come to CFA?
Yes, we do franchise funding. We don't do that. I mean, my department don't do it, but my colleagues in direct lending does a lot of franchise lending. Thanks. I don't think they have funded the cash converters yet, but they do typically.
There you are, ladies and gentlemen. If you want a franchise this side, funding is on my left. Okay, can we? And then if you are running short of money to give, he said they can fund. Peter also said come, and then they can also fund for a cash go. Can I get to, on my left again, National Housing Finance Corporation, another old friend of mine. On my left, I know them for more than 25 years. On my right, I know them from today.
Thank you, Paki. Thank you, Paki. Good afternoon, ladies and gentlemen. My name is William Malachi. I'm a program manager for incremental housing finance at the National Housing Finance Corporation. The National Housing Finance Corporation is a government-owned entity. We are reporting to the Department of Human Settlements. So we provide housing solutions in the country. So there's different programs that we have, but the program that is more of interest to the members of the MFSA, whom some of them are already our clients, and there are those that we are engaging currently to bring them on board. So the programs that that we are offering, we have first is incremental housing finance that I mentioned. That's what we're here for today. We do have other programs that we offer, such as bridging affordable product, which is mainly that's a short term. And when I say short term, it's like 36 months. Those are for developers who want to build townhouses. Obviously, there's income threshold in our company where we're looking at people or households who are earning between 800 rands up to 22,000. And then we also have like bridging subsidy that is aimed at contractors. If you get a contract with a municipality or the provincial government to build PNG houses, that is the funding that is targeted at that market. And then we also have first home finance. First home finance is a subsidy that is managed on behalf of government, which works well also with the incremental housing finance. When I said we work with some of the members that are here, there are those that are already working on that program. It's a subsidy that is given to people who are earning between 3,701 until 22,000. So there are quantums like that shows who qualifies for what. So those subsidies can work with incremental housing loan because we wholesale our funding. We don't give funding directly to end users for incremental housing, for instance. So if someone come and apply for a 200,000 rand loan from a lender, and then the subsidy kicks in, and that helps to lower that loan. And Paki will also, well, he can testify on that because they are their business, they are a part of the first home finance. So our loans for incremental housing, typically it's short to medium term loans. We can go up to 84 months, which is 7 years. Previously, we were doing 5 years, but there were some people who wanted to do backyard rental, and those were loans that are much longer. And then we changed the term from 60 months to 84 months. So there is some requirements. One of those is that you need to demonstrate a track record in the industry, and those that don't have a track record, they are newer. There is something that is like in the process that we are working on to have some form of an incubation that can assist those. And then we also have capital requirements, which is 20% capital adequacy that we require. And I know that others will say, but where will I get the 20%? We also have equity investment internally that can look at the model to see how much they can take in order to ease the pressure of that capital adequacy. And then, I don't know what I've missed, but yeah, those are the products that we are offering. We also have a stall outside. When you walk down the passage towards the end, there will be brochures that you can get the brochure and see the product offering that we are having. And then, yeah, even myself, I'll be here, and those who are interested, and then we can have those engagements outside. Thank you.
Thanks very much. I see there are some questions that are coming. I'll ask you that we go back to them. Just to summarize on National Housing Finance Corporation, with a CIFA, I can bring a business client to CIFA. National Housing Finance Corporation, I cannot bring a house for you to fund directly. You fund me, and then I fund the client. Am I right? With CIFA, you can bring a business, and then they will fund directly. With National Housing Finance Corporation, you give them money to a micro lender, and the micro lender funds the house.
Yeah, that's correct.
Okay. Number two, we said to get funding from you, if I want to raise 10 million, I need to have 2 million. Correct. If I'm run short of that 2 million, you can give me equity, but that means part of taking shares in the business. I think that's what you are saying. Correct. Okay. All right. No, thanks very much for that. I think I made a mistake when I said, on my right, I know them from today. I think Jason, we met around 7 years ago. Peter, we met online several times. So we are on that one. Can we get to, okay, before we get to the questions, I think it is very much important to be realistic based on the experience. We have got only 15 minutes to go, but I think we've got about 7 questions there. Maybe let me disclose. National Housing Finance Corporation, I was one of the first employees. I think my pay slip is employee number 3 or number 2. So I was basically there when it really started. And I was one of the first people that were funding. We even started another off-balance sheet, which is called Rural Housing Loan Fund. I was the one doing the due diligence for funding. I was the one coming to micro lenders, doing the due diligence, taking it back and making sure that it gets funding. My record, you can go back and see, was 100%. Every due diligence I submitted was funded. Some of them grew. One of the reasons I resigned was because of different issues. But the summary was that when I was there, we funded 7 black micro lenders. But that's about 25 years ago. The sad story was that 3 years later, all of them were closed down for various reasons. That is why I'm asking questions about funding, that funding is important, but it can destroy your business if it is not properly done. Remember, some of those people took their pensions, resigned from their jobs, were family men, started their businesses. When they were running, they wanted to expand them. To expand them, they went for funding. That funding had conditions that if you fail, this is what you will do. Now, the description of failure becomes very important. Because if you fail, it means you are losing your business. That is why it is very much important when we do these discussions, whether it's FinBond, whether it's that we go back to the lessons learned so that you don't repeat the lessons, because it created an impression that when you go to funding, it's the fastest way of losing your business. And the challenge that was seen was that those 7 black-owned businesses, to save them, you get a big brother to come and take them over so that they can be able to pay back the funder. Now, it be seen as a growth strategy for the big guys. So I'm just giving that background that we need to learn from the past so that we do not repeat the same mistakes that were seen to be a destructive instead of being a positive aspect of taking our process forward. Let's get to the questions. Can we start? Okay. What is the NCR certificate you need to have a cash converters? I think that's a pawn lending. Do I need, if I want to have a franchise, basically what the person is saying, if I get a TV screen or a car, keep it in my house, I give you a loan, and you don't pay me back, what type of NCR certificate? Do you need it or not? I think that's the question. The NCR people are here. According to me, I mean, if you don't pay me, I take your car. Why do I need a certificate? But anyway, Jason?
So we run under exactly the same credit license that unsecured microlenders run under in the short-term credit space. We have exactly the same requirements, and our products are limited in the same way, 8,000 Rand and less, 6 months and less. At Cash Converters, we're not property agents, we don't keep houses and cars. We generally give loans against anything that you can find under the roof of your house, and not the cars in your garage. So the license requirements are the same. We earn the same fees, an initiation fee, service fee, and interest. Yeah, so it's no different. You guys already have the licenses. You can simply take your money lending book, slot it under the roof of a Cash Converter, start pawnbroking to the customers that don't qualify, and then retail off and sell the bad debt portion of the pawnbroking book where the people don't come back and redeem their goods. I hope that answered the question.
Okay, I think there is the unsecured, there is developmental finance type of registration. So this one is just an unsecured. Anybody here can be called a pawnbroking, am I right? Okay, there is development finance and there is a normal unsecured lending. If I want to register for development finance, I apply for development finance. This one is just a normal NCR certificate. Okay. Now, thank you very much. I think the question is clear. The next one, sorry, collateral. Collateral, go back to the question. All right, let's get to FinBond then. I think there was collateral about SMM is friendly, is their collateral policy. Peter?
Hi, very friendly because our collateral is the underlying book. So if you're a small or a medium or a large one, it doesn't matter. And the size of the loan would be determined by the size of your book that you have at present and the health of that book as well.
Do you require personal surety, unlimited personal surety?
Yes.
Okay, collateral is yourself and the book. I think that's basically what it means. FinBond, what is your minimum criteria? I think minimum criteria and minimum amount and maximum amount maybe would be a better question.
Okay, we look at 250,000 Rand up till 5 million Rand. And it depends, the terms depend on the size of the loan as well as the health of your organization and your book. So there's various offers. Some of them, in terms of term, it can be up till 3 years. We won't go longer than 3 years. And then we will decide how long the interest-only period is and how long the amortizing period is on the loan as well.
Thanks. Since I think there are other questions that we missed. Coming to housing, I think Mr. Malachi mentioned about housing and about first home finance, and he said, I'm an example from Mafori on how we do it. I didn't want to talk about, but it is working. Let me tell you why. There is what they call the gap market. The gap market, let me just check time, we're left with 6 minutes. The gap market is those that earn less than 3,000, I'm right, they can qualify for RDP houses. Those earning more than 22,000, they can get mortgage bonds. So the missing gap is those between 3,000 and 22.5 or 22,000. Those people, government gives them grant to get a house. Grant means free money, it's not a loan. So it means that, and goes up to 160,000, if I'm not wrong, somewhere there. So it is a 169, let's round it off 170. It means somebody can walk into a branch. I take it's almost 90% of your clients. They earn between that 3,000 and 22. They can get up to 170,000 rands of free money. It means if somebody wants to buy a house of 180,000, all you need is to give him or her a loan of 10,000. You match it with 70, they buy a house. Am I correct? William, that's what it means. 10,000 loan, you match it with your government grant, they can buy a house of 180,000 as long as it's the first home buyer. I'm just mentioning it because there's a collaboration that can happen. Instead of applying for a loan from NHFC, you can execute this scheme like we are using. We do not apply for funding. We applied for the ability to offer that grant. Okay, I think that's it. Is there any other question? Leonie, we have got 3 minutes. If there's any question from the floor. Okay, which procedure one needs to follow as a micro lender if I intend debit order deduction by employer and a salary of our clients? Example is clients working in the mines or municipalities. I think this person is asking about how do I get payroll deduction? You don't want debit check, you want the employer to pay the... I think the easiest place is to go to the employer and ask him, hey, how do I get access to your, because they differ. Some have got a union scheme and so on. But from my side, because we are in that space with the municipalities and you present your products, housing, I don't think there's any employer that you can go and say you offer proper housing to your workers and they can assist. But for that one, I think it depends on each employer. But it's a process that you present according to me. Sometimes the unions get involved. I think that's what it means. I'm not, Leonie?
Yes.
I think from my side, if there's any other question, I'm handing over to you.
Okay, I think there's a question over there.
Hi, everyone. My name is Nelson. This question goes to Peter. I just wanted to check with regard to the fund. Do you also guys do acquisition funding? Okay, thank you.
No, my apologies. No, we don't do housing funding, mostly because of the length of the loan. We don't like to do loans above 5 years. So yeah, unfortunately, my apologies. We can help with developmental funding if you're only in the developing part, but not if you do the long term. So a construction loan I can help with, but not for a house or a property itself. So I can't do a mortgage, but I can help you with a developmental loan, which is linked to the business applying, so that would be a credit application. If that helps.
Yes, Peter. I was more asking with related to the business acquisition, if you, especially on the micro lenders, if you intending to acquire other business, should you guys also offer the business loan with regard to the business acquisition?
Again, my apologies, I misheard that. Sorry, my hearing. Yes, we do help with that. Only yesterday, we signed off on a loan that had 2 parts to it, because the one part is the micro lender also wants to open 4 new enterprises or 4 new outlets. So we finance that on slightly different terms than we finance the book itself. But we do look at expansion and growth, working capital. Yeah.
I think if it is acquisition, meaning selling your business, I think the rest from Atlas did mention it, that they are in their space. So I think Niresh, Atlas, and others, they're in their space.
Hi everyone, my name is Thierry from Nima Financial Service. This question is for Peter. I just want to find out something. When you guys fund people, do you take over the book, or what kind of, how do you get in control of a particular branch? How do you manage?
No, not at all. We take a session on your book for security. So only if you're in default do we take over the book as up till the value of what you owed us as security. But we don't step in on your operations or anything like that. We assess it on a periodic basis by giving you standardized forms to complete what the underlying numbers are, seeing what your default rates are, what's the average size of a loan, what's the average tenor of a loan, etc. And we do that because quite a lot of the guys that speak to us or request working capital from us do the definitions differently. You know, when is a loan non-performing? Some people just say, no, man, they'll always pay us back, don't worry. And other ones, you say, okay, well, it's after 3 months, so you have to write it off. So it's all those factors. So we just look at that reporting to see what the underlying book is doing. But no, the microlender full-on runs his own. It's not a franchise or anything like that. It is us just providing working capital for an underlying microlender to do what he knows best.
Okay. Do you have a follow-up question?
So basically, I still have the full authority of my business. I'm controlling my business. You guys are not controlling the business. Do you have any access into my business, or you don't have any access?
Says, do you have access to my business or not?
Yeah.
Basically operating the business, or are they just funding and standing aside, or are they interfering in your business?
Do you want to know if we're going to take you over? We're not going to take you over, no. The only access that I have to your business is you have to show me what's going on in your underlying business. If you go to any bank out there, any financial service provider, you have to be open and transparent with what is going on underlying, because you're using my working capital to make money for yourself. So the only thing I want is what is the performance underlying. That's all that I care about. The better you do, the better it is for me, because I can provide you with more working capital. I mean, I'm capped on the upside with whatever my interest rate is. Everything above that is for you. So it's not in my interest to take it over. It's not in my interest to start operating the business, because I don't want to pay for the workers. I don't want to pay the leasehold. I don't want to deal with all those operational issues. That's what you as the entrepreneur have to deal with, and that's what you make the money from by being the entrepreneur. I'm just providing you with working capital to fulfill that function.
Thank you very much. I think we'll definitely, lunch is getting, I'm not sure I'll need permission. Leonie, I see 3 hands. Can I?
So I'm going to ask the questions that we can't answer. Please send them to us. Send them on that WhatsApp number, and we will be able to answer them and give them feedback. I can see there's a number of funding questions, and I really want to thank all of the panelists. We really do appreciate the information that you shared. And Parky, thank you so much for facilitating. So on that note, we are going to have lunch for an hour, and when we come back, we will have 3 additional panels. Thank you so much. Good afternoon, everyone. If you can please take in your seats.
But try and get this up in the... Yeah. Who manages your regulation? Because I'm in...
Okay, for the sake of time, I think it's time that we start. We are going to start with our next panel discussion, looking ahead the payments landscape of South Africa, and Sophie will be doing the introductions and be facilitating. Sophie, let's...
Thank you. Can everybody hear me? Okay. Welcome to our 3rd panel. It's echoing, eh? Acting. Welcome to our 3rd panel discussion on payments landscape of South Africa. Payments are the backbone of the financial system, and over the last few years, we've seen dramatic changes in how payments are made, from the rise of mobile payments to the increasing push towards a cashless society. In South Africa, this shift has been brought both opportunities and challenges. While digital payments solutions have made transactions more convenient and accessible for many, there are still large parts of the population who are underserved or excluded. The pandemic has accelerated the move towards digital and contactless payments highlighting the need for robust and inclusive payment infrastructure. Today we are joined by experts who are playing a pivotal role in shaping the future of payments in South Africa. Our panelists include Shegrin Naidu he's a head stakeholder engagement at BankServe Africa. We've got Vaughan Hector, Executive Head of Payment Solutions at Altron. We've got Pinar Zietsman at Amplifin, and Mornay Swart, who's Chief Operating Officer at RealPay. These leaders bring a wealth of knowledge and experience across various sectors of the payments industry. So before we dive into our discussion, I'd just like to ask each panelist to introduce themselves and share a bit about their role and vision of the payment landscape in South Africa. Mornay, alsjeblieft.
Good afternoon, ladies and gentlemen. Just quickly from RealPay side, so we are also a payment provider, PSP, registered with the FSCA. We focus a lot on bringing technology to our clients. So I think that's the focus that we do, and then Africa will always be in our blood. So we've opened our 8th Africa country now, so it's exciting stuff for us, especially multinationals moving into Africa, and how do we adapt different products in Africa to plug in mobile rails, etc. So we focus in South Africa on debit pool transactions like DebiCheck, multi-banked, TT1, 2 and 3, and then also credit push transactions, meaning like card, Capitec Pay, Absa Pay, Nedbank Pay, all those fun stuff that's happening. So that's in a nutshell from RealPay. Thank you very much.
You guys hear me? Oh, sorry. Hello. Sorry, I couldn't fight the urge. Shegrin Naidu, Head of Stakeholder Engagements at BankServe Africa. How many of those of you in the audience know who BankServe Africa is? Let's see it by a show of hands. Okay. So, I'm not going to do a masterclass on BankServe Africa. We are the payment clearinghouse system operator. Our role is to sit in the middle and to be able to facilitate interbank transactions. We've been around from 1972. We're approximately 52, right? Yeah, 52 years old. We're owned by the banks. You've got your staples such as DebiCheck, your PayShop, your EFTs. All of those get processed through BankServe Africa. We're owned, as I said, we're owned by the banks, but we've also been very involved in this current phase with the modernization program to try and modernize payments in South Africa, to try to displace cash, or at least to be able to eat into cash and to create a more smarter, more modern payment system in South Africa. Thank you.
Here we go. So, Mornay, it looks like you've started a new movement here. We're going to stand up now for these things. Wasn't expecting that. So, Vaughan from Altron FinTech. I think Altron, the name Altron is probably more known for Altron Netstar, Altron Xerox in the country, Nexus, and so forth. But I think in this audience here, we're more and better known as NewPay and Delta. Those are two of the divisions that we run. We've been around now from the NewPay side since 1998, so what's that, about 27 years, 26 years. And yeah, so we obviously play in the payments shape and industry and so forth. When we started out, we used to go and do marketing at ATMs, 3 o'clock in the morning. I've had a few rifles against my head. When we were pitching solutions to people. That has obviously changed, and today the solutions that we offer is a much more holistic solution, where we go from loan origination all the way through to getting the money back in. People always say it's very easy to give money out. How you get it back in again, that's the tough part, right? Obviously decisioning and all of that kind of stuff comes in between and so forth. So yeah, that's what we do. Thank you.
Pinar Zietsman. I'm the CFO at
Amplifin. I'm a late replacement for Stephen. He's not feeling well, so it's the B team here. So if you've got difficult questions, just ask the learned gentleman on my left. A little bit more about Amplifin. Amplifin has been around since 1997. We're also a payment service provider, specifically focusing on debit check, EFT debits, EFT credits, e-wallet payments, as well as debit and credit card payments. I think we pride ourselves, and obviously you can hear I'm a CFO and focusing on compliance. I think, and it's the theme of the conference as well, we pride ourselves on our compliance adherence, because we believe that without the necessary compliance, sustainability goes out the door. Thank you.
Pinar, thank you very much. So in this session, we'll explore key questions such as how can we ensure that payment systems are secure, accessible, and affordable for all South Africans? What role technologies like blockchain and digital wallets will play in shaping the future of payments, and how we can balance innovation with the need of regulatory oversight and consumer protection. I think we should delve straight into it. I'm going to open the floor to the audience and take questions, and we limit it for time. I've got until 3:15 to run this panel, so keep the questions short and concise so that we can get good answers from our panelists. Anybody from the audience? Okay, I'll have one. In what ways has BankServed embraced innovation and technology to align with evolving regulatory requirements, and how do these advancements enhance the efficiency of the payment system? Morne, sorry, Shiragren.
I was like, yes, Morne, let's see. Cool, so in order for me to be able to address that question, I'm going to have to actually go into some of the regulatory stuff. So for those of you that had a big lunch, hopefully you don't fall off to sleep. Before 1998, South Africa's payment system really had evolved organically. As I mentioned, Banks of Africa we were formed in 1972. Up until that point, excuse me, the big four banks at the time were our shareholders, and the ecosystem had really evolved, as I mentioned, organically. 1998, the SARB, that's when the SARB really took its role, took its initiative to be able to, by establishing or developing the National Payment System Act, which is the act that governs the current payment system landscape. At the same time, the SARB had also undertaken, in fact, around the same time, it might have been a little earlier, you would have probably the establishment of SAMOS, the real-time gross settlement system. There was also they decided that they needed to really be strategic about how they develop payment system legislation and regulation. And this was all in keeping with Section 10(1)(c) of the SARB Act, which says that the SARB is responsible for the stability of payment systems in the country. So the SARB then developed the Blue Book, right? So the Blue Book was developed around circa 95, 96, 97 in that period. And in 98, as I said, the National Payment System Act, as we know it, was promulgated. Now, the Vision 2025, which we are currently laboring under, we're getting to the tail end of that vision by next year, is really an iteration of or continuation of the SARB's Blue Book. So the strategy that was developed back in 96, 97, 98 in that period had been renewed and revised periodically over the years. And over each period in which the National Payment System strategy was renewed and revised, that's when the SARB then drove that particular strategy as part of the policy objectives for that particular period. Now, Banks of Africa is a payment clearinghouse system operator. In terms of the NPS Act, the current NPS Act that I spoke about, one of the key things that the NPS Act had established at the time was the National Payment System Department of the South African Reserve Bank. It also established the recognition of a payment system management body, i.e. PASA, and PASA was then responsible for the licensing of a payment clearinghouse system operator. As I said, guys, if you've had a big lunch, lean back. So getting back into Bank South Africa's role as a PSO, we are also designated as a systemically important payment system financial market infrastructure by the National Payment System Department of the South African Reserve Bank. And the reason for it is purely because of the systemically important nature of the volumes that we process. We process in the region of 5-6 billion transactions per annum and approximately 13-14 trillion rand per annum, right? So as I did in the introduction, I did mention some of the payment systems that Bank South Africa processes, is the PSO in respect of. And as a result, the SARB had designated us as being systemically important. Now, to answer your question, how has Bank South Africa embraced technology in the context of the changing regulatory landscape? Now, one of the key things to also keep in mind is that when Vision 2025 was developed, it was developed circa 2018. It was issued to the market in circa 2018. Bank South Africa had, together with PASA, undertaken, excuse me, an international study tour in which a research paper was developed to understand what was happening in other jurisdictions, approximately 11 other countries, including South Africa. And the outputs from that research study went into what was called, or what eventually became known as Project Future. Project Future, as we know it, developed into the Rapid Payments Program. So Rapid Payments Program, for those of you that might not know, is PayShop. So PayShop, the PayShop that you see today, actually had its genesis in that Project Future, which was linked to that study tour that Bank South Africa, PASA, and so forth had undertaken in or at least the desktop research in 2017. That desktop research had also flowed into Vision 2025, which was released in 2018. But at the same time, the SARB had also been doing its own, together with the National Treasury, they were reviewing the payment system landscape to ascertain whether the National Payment System Act was fit for purpose. So the current National Payment System Act, as we know it, it worked well enough for us, right? I mean, since 1998 or thereabouts, it's been pretty good. But in order to take us forward to the next stages for a modernized national payment system, the National Payment System Act, and it required this review, it required, as I said, Vision 2025, all of those elements went into the development of the work that we're currently undertaking, which was establishing the PayShop. But getting into quickly, and this, I'm going to stop now, I promise. I know I waffle, apologies. I'm just so passionate about this topic and about this whole space, is that Vision 2025 comprises of 9 objectives. And some of those 9 objectives relates to regional interoperability, financial inclusion, accessibility, flexibility and adaptability in the payment system, competitiveness. So all of those factors went into the development of the systems that we are now working with. So the systems that went into development into PayShop. PayShop was developed in a manner which was very distinct from previous payment systems, using, and I'm going to geek out a bit, ISO 20022 in terms of the standards, and that the recognition of ISO 20022 had gone back some time. In fact, DebiCheck was developed on ISO 20022 as well. But it was also developed in the cloud, using modular technology, using APIs. So all of the modern technology, you asked how has Bank South Africa embraced technology in the context of regulation? This is one of the things that we've done. Long answer, short question.
Thank you for that. You're not off the hook yet. So as far as PayShop is concerned, how much more development can we expect in that space, or has it reached its maturity as far as what capabilities it has potentially going forward in the future?
We've really only just scratched the surface, and that's the reality of it. PayShop is obviously developed on the Rapid Payments platform that I mentioned earlier, and it is a scheme and a product on the Rapid Payments platform. But the platform in itself that was developed in accordance with very modern technology. And as I mentioned, ISO 20022, the capability to be, to your question, some of the things that will be coming out in the next few periods would be introduction of request to pay functionality. There was also a QR standards and QR functionality that will be introduced into PayShop. In fact, the QR roadmap was launched not too long ago. So these are all things that will enable interoperability and will enable PayShop and will enable instant payments in South Africa to become norm, to become ubiquitous, to be able to allow us to actually really make a dent in financial inclusion.
Wil jy ook 'n bietjie nou?
Just to his point.
Yep.
Can you hear me? Can the crowd hear me? Okay. I think I just want to add on to him. I think the key for us here and the learnings are from DebitCheck, and DebitCheck is our world majority, is moving faster. That he mentioned that the RPP. I think that's where we need to move into an industry where literally we are instant gratification generation at the moment. And how do we get that instant payment, instant settlement, instant clearing? That needs to happen with the ISOs. The ISO is the main important part that he mentioned there. But I think also the learnings from DebitCheck is DebitCheck never I can say the training or the education was done and it was almost everyone needs to have it. Where PayShop is done differently. Why? Because it started small. The trust needs to happen, meaning we first started with person to person, so I can pay my friend. Then business to person. Then, as he mentioned, the QR codes, etc. So as you can see, the evolution of PayShop is going to be totally different than what we had in DebitCheck. So I think that's, for me, the key part of this project.
Okay.
Couldn't agree more.
So let's stay on PayShop for a little while. Given the sector that we come from, one of our biggest challenges is cost to grant a loan. And what are the possibilities that these costs would be brought down significantly? See, the numbers that are being processed there are surely large volumes that are going through the system, and us lenders out there are bearing the brunt, and so are ultimately the consumers at the end of the day. And our feeling is that the cost to grant a loan should be able to come down quite significantly. That's why I think PayShop is in the spotlight now. And could that be achieved, and is that a goal for BankServe Africa?
A role for BankServe Africa would always be in its role as the payment clearinghouse system operator and as the scheme manager for PayShop, to ensure that PayShop is being provided in a safe, secure, stable, efficient, robust manner, that the rules pertaining to PayShop are clear and well managed, well governed, that there's very minimal likelihood of ambiguity and so forth, and misunderstandings in terms of the application of those rules. Insofar as the actual pricing of PayShop, that is outside of our remit. Notwithstanding we wear two hats, PSO hat and scheme manager hat, ultimately it really comes down to the participants that actually participate in PayShop. And those participants currently so before I make the comment, the current regulatory landscape in terms of the 1998 NPS Act that I spoke about, really restricts direct participation in the national payment system to your participant banks and another level called designated clearing system participants. You have got the other levels, of course, you've got your TPPs and the like, which is also in terms of the 2007 exemptions or amendments that were made to allow for that level of participation. But they need to be sponsored in by banks. So essentially, the bank would always be that participant and that main sponsor. There is a move currently afoot by the SARB, which is called the Payments Ecosystem Modernization Program. And the objective of that is to establish digital public infrastructure. And what I'm saying is totally out in the public domain. And the objective of establishing the digital public infrastructure is taking learnings from other jurisdictions, such as India, such as Brazil, in which they have also established their own real-time instant payment systems, and the costs are very, very low. But that's because those jurisdictions, in the manner and form in which those instant payments were implemented, was different from the South African context. And so the SARB is working within the constraints of the current NPS Act. So one other point I needed to have made when I made that first comment, sorry guys, as I said, there's a lot, was that per the 2018 review, the policy that was issued in 2018 with the SARB and National Treasury, in terms of which they reviewed the National Payment System Act as it stands. There were recommendations which are contained in the policy that you can find on the SARB's website. So anyone that's interested in this, welcome to look onto the SARB's website to actually source that policy. And the recommendations in that policy entails expanding direct participation into the national payment system. There's a myriad of different things. In fact, one of the others is that to remove the payment system management body status from PASA, and for PASA to become what it's now going through a process called a payments industry body. But I digress. The reason I mention that is that all of those elements are going to take us into a direction in which the SARB will be able to play a more direct role, such as the other counterparts.
I've got two questions, the last one for you, and then I'm going to let you go. As far as our banking infrastructure and BankServe Africa, as far as they're concerned, how does our banking infrastructure rate according to the rest of the world?
Our banking infrastructure, I would say, is good. We have got, and I know anecdotally we've all heard stories that one of the reasons that we were not as impacted in the 2008 global financial crisis was because we've got such a well-regulated and deep roots in terms of the banking infrastructure. So I don't think that we have any concerns from that front. It's really about trying to ensure that we are able to meet the needs of the populace at large, and that we are able to compete on an even footing with the rest of the world. Because the rest of the world is also, I mean, they are developing fast, particularly our counterparts in BRICS. And our government and the powers that be have seen that. So that's why they're trying to ensure that we are able to move expeditiously while still retaining the rigorous, robust governance.
Excellent. Thank you for that, Shiger, and appreciate. I have a question. Can we just go back one, please, Sune? How can PaySharp work in my business? And I think that would go with you, Monet, if you could answer that.
It's a difficult question, to be honest, but as you can see the evolution of PaySharp, I think at the moment is that payouts that can happen. So meaning you want to pay that faster. And I think that clearing and settlement is exactly that. So the rail that they are currently using is the RTC rail, like we know it. RTC, normally real-time clearing. So RTC is normally a more expensive fee, where on PaySharp it is not. So that is where they're starting to infiltrate PaySharp into the industry, not like a debit check, like I mentioned, that just sit on the industry. It's infiltrated so that the trust can be built, so that the financial inclusion can come and people can have that trust in the system. So you as a business can, at the moment, use that, and as soon as request to pay is there, you can collect from that via linking bank accounts, proxy, etc., QR codes that will come. That will evolve. And I'm glad that that structure is actually doing like that and not just put on the system.
You can't currently use PaySharp.
No, you can use PayShop. You can use it now. We've integrated PayShop. So you can use PayShop. That will be as a payment leg. So meaning RTC or batch, what we call it. So RTC, you can make that payment out to that lender.
Is there a question from the audience regarding PaySharp in the business?
Yeah, I think when you're saying you can use PaySharp in terms of payment from the business, isn't it very limited? How many transactions can you do? We are talking about business now. I want to use it as a disbursement. How many transactions can I do of PaySharp? And what is the maximum amount that I can do of PaySharp per transaction?
Who would sponsor? Monet? Sorry, we didn't get the question, ma'am.
Okay, I'm saying, when you say we can use PaySharp in a business, from my understanding is PaySharp is very limited in terms of the amount. First of all, how much can you pay? And then again, a number of transactions. How many number of transactions can I pay per day or per month?
I'll answer that.
Come on,
Vaughan, sorry, you want to, must I take it?
You can take
okay.
it.
So the number of transactions is unlimited. I mean, there's millions of transactions already running through PayShop as a payment out. At the moment, the limit is 3,000. That will increase to 50,000. Right. So,
well, it's going through the process.
Yes. Soon.
Okay.
I hope that answered your question, ma'am. I hope that answered your question.
Are you satisfied?
Yes, perfect.
Okay, I need to ask a question. It's either Vaughan or Pinan that can take this one quickly. Common causes for mandate disputes in the payment system.
Sorry, Sophie.
Common causes for disputes.
Common causes for disputes.
Yeah. Mandate disputes.
Mandate disputes. Common causes for that, it could be anything from cash management to a valid dispute. It's difficult to evaluate. I know the PSSF did a study probably a year ago, but if you go and evaluate the results of that, it's purely for cash management purposes. I think if I can elaborate, I think from disputes, if we look at the date change rule that was implemented in October 2023, some banks were late, so eventually all the banks were on board by February 2024. And effectively all that did is, if your collection date on debit check was the 25th, it fell on a Sunday, you presented on the Friday, it was disputable or reversible, and after the date change rule, it's moved to the business day prior to a weekend or a public holiday, it's not disputable. And we've seen a drop on the dispute side of 32% if you compare September 23 to September this year.
So there's been quite an improvement in that segment.
Yes, definitely.
Well then, Pinar, this brings me to my next question. How many mandate suspensions impact the recurring payment space?
It's cause and effect. I think like we saw the drop in the disputes after they brought in the rule, we saw a similar increase on the suspension side. So our stats, and it's purely focused on data, is roughly around 32% as well on the suspension side that it has increased. And I've got to be clear, and you've got to look at suspensions, and remember you get the same stats, but you've got to look at the reason codes behind that, because there's system suspensions, and that's mandatory. It's once-off presentments and so forth, or after 7 consecutive unsuccessful attempts. But then you get debtor-initiated mandate suspensions. And that's where they walk into a bank, say the contract's been amended, I've cancelled the contract, whatever the case might be. There's 3 reason codes that's debtor-initiated, and that specifically has increased by 32%. How do we manage that? My best advice to the audience would probably be, at this stage, there is no focus from the banks at this stage on that. It's to make sure the moment you get that suspension back, that you contact that debtor immediately, make contact, find out the reason for that. And I know the process through the PSSF and through the MFSA is also to look at bringing in more friction. I mean, me and Brett had a discussion earlier. Banks are actually advertising how to suspend a mandate. And I think the moment we can get that friction in, just to take out that training and process out of the process, we'll see a decrease again in the suspension rate. But it's not an easy solution.
Sorry, I just find that very unacceptable. You know, that there's no buy-in to address this issue, because it's quite concerning. And what could we possibly do from our side to get this matter escalated so that the powers that be can notice or take issue with these suspensions? It's totally unacceptable.
I agree with you, and I think through the PSSF, and keep in mind, the rest of the panel will agree with me, PASA is run by the banks. They're the only ones that's got the voting rights at this stage. The PSSF is a non-bank body, at least as a voice. They are consulted. So the PSSF is driving that process, and I think from the MFSA side, it's also on the MFSA's agenda to drive that and to make sure that the banks and PASA is aware of the issue and see what can be done. But it's not an easy fix, because remember, like I said, the moment the disputes came down, the suspensions went up. If you're too strict, suspensions are going to come down, and they're going to change bank accounts. What do you want to sit with? So it's a fine line and balance.
Have we got any questions from the audience? On the right there.
Zwelabantu from Africa Finance. I have two questions. The first one is, when can we expect participation of non-banks in PayShop? I know that recently DSTV with another company, they developed a system where people will be able to pay their DSTV fees via PayShop. Now, will other system operators be able to participate?
Sorry, we can't hear you. If you can speak up, we can't hear your question.
Okay, I'm asking when will non-banks be able to participate in PayShop? I know that DSTV already allows for subscription fees to be paid via PayShop, and when can we expect system operators like MicroFinance to participate? Because I know at the moment it's fragmented. We have your FNB or your MicroFinance e-wallets, and there is a demand from consumers or from our clients for them to be able to transfer funds from those closed-loop wallets to their bank accounts, and they also require that we make payments directly to their bank accounts at other times. And the second question is going to marry the issue or the topic that was talked about around digitization in the last session. Does the regional payments, and I'm asking Stephen this question, does the advent of regional payments open up opportunities for micro-lenders to operate in other areas in the region? And should we not be starting in our own backyard now to digitize the lending process?
Any takers?
I don't have a mic, so I can.
You know,
I know you mentioned specifically MicroFinance and e-wallets, and when will everybody be on PayShop? And I can't speak for the rest of the gentlemen, but I think I can just talk from an MicroFinance point of view. At this stage, there's a bit of a restriction in terms of PayShop was initially developed person to person. They're still in the process to push up to 3,000 to 5,000. So at this stage, it's not the ideal solution to get money immediately into the bank account. If you want to transfer a loan of 5,000, it's not going to work. So we are in development at the moment. It's fit for our clients. We'll roll it out at that stage. I don't know if there's any other comments from the panel on that question.
Good.
My comment was just testing. Okay. So just about the question itself about when non-banks can participate. Non-banks can participate, but it's with the bank. That's just currently it. So it as long as you have got a bank that you are working with, then by all means, you would be able to participate in PayShop. It's not as if PayShop is restricted to non-banks per se. It's just the direct participation of a non-bank without a bank is currently prohibited or not permitted. You're required to work with a bank. That's it.
Maybe I can just add to that. I'm going to go back to pricing that was discussed initially around PayShop and everything, or rapid payments. Okay, so we see the publications out in the media, and we see fees of between R1 and R7 for a transaction being paid out. But what we don't, you can't hear me. Okay. But what we don't see is that there are certain limits on the values of those payments and things. So don't think that everything is just automatically going to be, oh, it's R1, cool, let's go for it because it's very cheap. Unfortunately, there's other stuff that comes into that. The initial launch was person-to-person payments, so it's out of a person's account into another person's account. The fees, the structures, everything that we're seeing is based on that person-to-person payment structure and everything. What we haven't seen yet out in the market is a business-to-person rail within the rapid payments stream. And 100%, and exactly to the point that was made already, the different banks have to actually activate you and start working on that with businesses to start using those rails. So we've started using those rails. We've started testing on it. We do a few thousand transactions there at the moment, testing it, pushing transactions out. It's running nicely, and we believe that we're getting an increase in the value as well, now on the 20th, if I'm not mistaken. So on the 20th, we will go from 3,000 Rand up to 50,000 Rand that we can disperse via those channels. But it is business to person. This is not person to person PayShop fees that you see out there in the market, please. It is affordable. It is affordable. It's a good system. More affordable than RTC. That's where we started, right? We started with RTC. In fact, we started with RTL. I know. So RTL, the real-time gross settlement, RGGS, that's the stuff that we started on. Very expensive. Moved over to RTC. It has its own challenges because not all banks actually treat a real-time clearing as real-time clearing. They don't. That takes some time to actually get through the process in the system. PayShop is very efficient. So it really, really works well. We are testing the waters on it. Like I said, we're doing a few thousand transactions there. And we expect this thing to grow and to really, really bump and tick over and tick on. But yeah, it's a progress. It's a work in progress.
Okay, you can go ahead.
Hi, my name is Nicole. I just want to go back to the disputes thing, sorry. I tend to agree with Sophie that I think it's unacceptable that there is no process currently. We've been in debit check now since 2021. We've been reporting disputes from 2021. I think every micro lender in this entire room can tell you that there is actually no help in terms of disputes. What is going to happen? Because everybody being aware of it is lovely, but no one's doing anything about it. So what is going to happen with the dispute rate? Does anyone have an answer on any level?
Maybe if I just want to clarify, are we talking about disputes or suspensions?
So it's both. It's disputes and suspensions. Your customer's going directly after he gets the loan and he's disputing it straight away at the bank, that there's no there shouldn't be a transaction because he didn't take the loan, and then the suspensions as well. The suspensions are taking place on another level, and we're only finding out about it via our service provider reports. So you don't really get any kind of opportunity to fix or to phone the customer and ask them why they've suspended or disputed the transaction until very late in the month, when you finally get your reporting to say that this is what's taking place or this is what's happened, this is why you didn't manage to collect. So I'm just asking if a customer, before in ADO, like the banks would phone you straight away and ask you if there was a mandate created. No one's phoning, no one's talking about it, but we're all at a point where we're constantly losing because nothing's being done, or there's no process, there's no plan to say there's a process, no one's implemented any kind of structure to say that yes, there's a little like call center that you can call and say, yes, here's your transaction's been disputed here and this is the reason why, please submit your documents or anything like that. No one's doing anything about it as far as I can see.
Warren, do you want to go?
Do I need that one again? So in terms of the disputes, there are obviously certain things that's coming, but I think that Pinar touched on it earlier on by saying, after the implementation of different rule sets around date adjustments and so forth, the dispute rates have come down significantly. So we actually, we're never happy with disputes, right? But we're comfortable, if I can say that, sort of, with the levels of where the disputes are. It's actually fairly low. Our percentage is sitting at 0.3%. That's low. It's not high, okay? Yes, you do have some abusers in the system, and for that we've got debit order abuse checks and all that kind of thing, and we investigate and we go for it. There are certain initiatives, and there's lots of discussion behind the scenes carrying on around disputes and suspensions within industry. So we obviously talk to our acquiring banks, and these guys do exactly the same. All of us do this, and we've got these discussions ongoing, all of us, and we're fighting it from every single angle that we've got. And I can tell you that we're not alone. The MFSA is probably one of the biggest key drivers behind this thing as well. And we are all sitting working on providing evidence, data, etc., through which we will take these things with them, take hands, and go and present a case through to the powers that be to go and try and see how we can amend these things and so forth. There are certain rules and adjustments that are coming, and maybe closer to it than I am, guys, but there are also the limitations of how long you can dispute for and so forth. Yeah. So okay. So there's certain things that are coming, and unfortunately a ship takes some time to turn. So it's one thing and then the next, and so it piles on and so forth. In terms of suspensions, and Sophie, I think this morning you referred to serial suspenders, right? It sounds kind of kinky, almost. You have to do your feasibility around clients, right? So at the moment, unfortunately, that is what's allowed. The legislation allows for. So do your homework. Check for the serial suspenders. See if you can see those trends and where people are doing it. There are reports and platforms where you can actually do this, where you can see, does a guy habitually go and suspend transactions? And if he does, then, well, don't lend to him, or knowingly take that risk to lend to him. So these are all just factors that you need to consider in the process.
Okay, Monet, we cut for time. I'm going to let you go.
Okay, great. It's a difficult question, actually, but I think debit checks' Achilles heel is exactly that. So remember, the fight that we do from the MFSA, CBA, PSSF, all the banks need to agree with the change. And I think that's where the tricky part comes in. So it's not like no one's doing something down the stream. We don't feel it as a merchant yourselves, but the fight is there and the banks need to agree. If one bank doesn't agree on that rule, it goes back to steering, then go back again. Understand? So that's the process for us fighting that rule. But maybe a statement that we can make and that we're trying to implement is try do alternative payment options. So yes, do your scoring on that client. Make sure the client that you get is actually, that amount is actually what they can do. Try and stay in the mandate. The Consumer Act is still the strongest one, so they can, that's unfortunately the rule. But try alternative products perhaps. Try making other ways of getting this money in. Okay.
Okay, Monet, thank you very much. Unfortunately, ladies and gentlemen, we cut for time. But this topic is obviously a very important one. Without our payments service providers, we wouldn't have an industry. And I think a lot of work needs to be done as far as costs are concerned in providing crucial services to the underserved community and consumers out there. So those are my parting thoughts and closing thoughts for our panel discussion. Gentlemen, thank you very much and appreciate your time. Thank you.
Thank you, Sophie. Much appreciated. We can welcome our next panelists. It's Magauta Mpashlele, Jan Augustine, Roy and Rihanna from the NFO. While we are preparing for that, I want to show you one of our focus group videos. So let's go into that video just to show you what our research is about and what the members say.
Why name at the bank must be? So I'm not as scared of the bank as I am of the machines and this is like cool with it. And then
So while they're miking everyone up, in the focus groups, we talk a lot about the mashonisas. You know, what does the mashonisa do? Why do the consumers pay the mashonisas? Just to show how big the problem actually is in the industry. Last week, I received 40 tip-offs, guys, and I spoke to Tibogo, and I'm going to send her everything. Not NCR registered, they've got nights officers, don't upload the data onto SACRA. So I'm just getting everything ready. Tibogo is excited, she's got her investigators here, and we will have to start enforce on these guys. We really want to get credit providers compliant, but we can't do it at the cost of the consumer. So on the panel today is big guys. If we hear FIC, I want to, yes. So Jan was in our industry. He used to work for the NCR. Then he did consulting work for the industry, as well. So what I'm going to do is I'm going to ask each of the panelists to do a quick introduction about who they are and who they represent. Let's start with you, Magauta.
Thank you, Leonie, and good afternoon to everybody. My name is Magauta Mpashlele. I'm the Executive Director at the South African Credit and Risk Reporting Association. Thank you.
Thank you, everybody. My name is Rihanna Steyn. I'm the CEO of the new National Financial Ombud Scheme. It is a new financial ombud scheme in this country, started on the 1st of March this year, and we are the amalgamated scheme of 4 previous schemes that you're all very familiar with, and maybe some of you haven't heard of the NFO yet, but the banking ombudsman, the credit ombudsman, the short-term insurance ombudsman and the long-term insurance ombudsman, those 4 ombud schemes amalgamated on the 1st of March, and we're now the NFO. Obviously, being able to serve a bigger audience and customers and financial services industries. Thank you.
Thank you, Leonie. Good afternoon, ladies and gentlemen. My name is Roy Retief. I'm the Head of Operations at Southern African Fraud Prevention Services. Just to give a bit of background about what we do, we are a registered credit provider, but we specialize in compiling and sharing fraud data amongst our member organizations.
Good afternoon, everybody. My name is Jan Augustine. I'm the Manager of Inspections and Enforcement at the Financial Intelligence Center. And we have the job to supervise and regulate a large sector, the non-financial sector, as well as credit providers and crypto assets for purposes of money laundering and terrorist financing. So massive changes in the last few years in those areas, but looking forward to engage with you on the topic.
Okay, so the first thing I want to do is everyone please send your questions, because I know there's going to be a lot for especially the FIC. Jan, I'm going to start with you. How many credit providers has registered?
So Leonie, I think we need to take a step back quickly. So in December 2022, credit providers for the first time came into the fold as an accountable institution in terms of the FIC Act. So we initially anticipated that there will be some teething problems, and we afforded the industry about 1.5 years to get the house in order. Sadly, we sit with over 8,000 registered credit providers with the NCR, and only 1,500 has been registered with the FIC. Now, for purposes of effective grey listing, this is a huge issue. It's not really an issue at the moment because the focus is very much on the rest of the DNFPB sectors, the non-financial sectors, because of the mutual evaluation that took place and the subsequent grey listing. But it is a massive issue because we are being re-evaluated in 26, 27. And if we don't get the credit industry fully supervised for purposes of anti-money laundering and terrorist financing, we face the possibility that we may come off the grey list now and find ourselves back in that seat in 26, 27. And I think you have to agree with me that that would be horrendous for South Africa. It's simply a situation that we cannot afford.
I definitely agree. Is there any questions in the audience specifically with regards to FIC and FIC compliance? You don't have to be scared. Jan is not going to enforce today.
I'm not taking names.
Yes, Mariette.
Thank you. Jan, I've heard a tale the other day about a service provider, a loan management system service provider, trying to explain to his customers, you know, you need to be FIC compliant and so on, and just starting off. And he told me some people just say, no, sorry, I'm not interested. So, you know, I know you are always talking about the importance of FIC and so on, but I think there's so many microlenders that just don't have a clue of, they are, regulatory speaking, if they are not FIC registered, they are non-compliant. And I know you've talked a lot about fines that's going to come and so on. So when are you guys looking at starting implementing fines for the microfinance sector?
Sure, Maria, that's a very good question and very topical. So, firstly, accept that we have given some grace, but the fact that most of the microlenders in the credit industry were required to be registered by the 31st of March 2023 means that those entities who are not registered are liable for a fine. Now, you will say to me, you know, when will FIC come to me? I just want to explain this very carefully to you because people don't understand the risk that we are talking about. When we talk about AML and CFT, we're talking about the risk that you are being abused as an industry player for purposes of money laundering. There's a risk that you actually may be charged criminally because you're part of money laundering. And there's so much I can say about that. Let's just get back to the fights. Yesterday, we got judgment in an appeal where we issued a financial penalty to an attorney to the tune of 7.8 million rand. 7.8 million rand. Part of the charges was non-compliance with registration as well. So we are in process of issuing financial penalties to credit providers as well. And as I indicated, it's quite an easy process. I said in this forum before, we know who you are. You are on the website of the NCR. There's a list of credit providers on there. I don't have to do an inspection and go through a laborious process. I can simply issue you with a notice of intention to sanction, give you an opportunity to respond, and you will have to pay a financial penalty and immediately register. It's as easy as that. Now, the problem is that if you were supposed to be registered on the 31st of March 2023, it's been a while that you are non-compliant. And I think that escapes everybody. You will not get an opportunity just to register and avoid a financial penalty. We are simply going to issue financial penalties. And we've just withheld that action for a while because we are working on the FATF listing issues. But it is coming. So, if you think about it, if you are not registered, the chances that you comply with FICA in any way whatsoever is actually pretty limited. I mean, I'm not even getting to a risk and management compliance program, the risk and compliance return, the reporting requirements that are on you, all those issues, the usual target financial sanction screening, complying with the terrorist financing regulations, all of those issues you are not dealing with. So I've always said to the institutions, if you don't register, it's the same with not complying with the RCRs. If you don't register, you're actually putting a big red fat sticker on yourself. Say, here I am. So when it comes to RCR non-compliance, we said to FATF that we consider all those institutions who do not submit the RCR as automatic or deemed automatic high-risk institutions. And therefore, you are more susceptible for an inspection. So, and you know what? What I don't understand is, it's not a licensing requirement. So it's a compliance obligation. The fact that you need to register your compliance with the Act or coming into the fold is not dependable on the fact that you must register. It is on the fact that you are an institution that is mentioned in Schedule 1 of the FIG Act. So you are already in the fold. Those compliance obligations are already applicable to you. It's not connected to your registration. So for that purposes, I can walk into your offices tomorrow and conduct an inspection on you for compliance purposes, because you're an item 11 accountable institution.
Yes, Sophie.
Am I on? So Jan, what I'm taking from what you were saying, you are looking for all the registered NCR lenders to become FIC registered to help your cause, and at the same time, you just can't accept that these people have now registered and your work's done. I presume there would be investigations in any way on certain.
So Sophie, you're quite correct. I mean, the one thing that you must understand is there's an obligation on you. There's an equal obligation on me. So part and parcel of the grey listing is that as supervisors, and particularly FIC when it comes to the DNFPB market, and that's not a sector that we used to regulate. So the attorneys, the estate agents, the gambling industry, all these institutions were the responsibility of certain entities, like the Legal Practice Council and the law societies, or the Estate Agency Affairs Board, the PPRA as they later became, or the provincial licensing authorities when it comes to casinos, etc. So they had the responsibility to properly supervise these entities. The long and short of it is that FATF found that regime was not effective. To such an extent that it was decided that all those institutions will now in December 2022 become the responsibility of the FIC. So that means that there's an obligation on me to do certain things. Now, the one thing that we were lacking in our inspections was an objective tool
to identify the higher risk institutions. So as I require of you to apply a risk-based approach to your AML environment and your customers, there's an equal obligation on me to look at higher risk institutions and understand what that universe looks like. We did not have such a tool. So in terms of IO3, IO4, 2A, there was a shortcoming. We addressed that shortcoming through the RCR process. So that risk and compliance returns that you must complete is utilized in order to establish who the higher risk institutions are. So we got largely addressed on that issue. The second part of that was that we needed to do risk-based inspections. So part of it means that we look at who are the higher risk institutions in the industries, the sectors, whether it's attorneys, estate agents, credit providers, whoever, and we identify them. We need to go and visit them specifically. And if there are no high risk, medium high risk, we just follow the sequence of higher risk institutions. I'm happy to say that we also got largely addressed on that topic as well, Sophie. Then we got largely compliant also on awareness and outreach, because I think you'll agree with me, there's a lot of education that needs to take place in this industry. And I really invite you to look at our website, at our guidance, our PCCs. You must accept that you need to do a lot of self-study. You have to. You have to. I remember a time when we started at the NCR, where there was a lot of pushback from microlenders. You will agree with me. Today, how many years later, the NCR has not disappeared. The FIC is not going to disappear. Those obligations on you is not going away. So for me, that's the way that regulation works. There's a time that it takes for people to get used to it. My advice to you is get used to it rather sooner than later. Because think of that 7.8 million rand fine we gave to an attorney. There was another appeal and a fine that we gave, 280,000. But I think you would agree with me, it doesn't matter whether it's 50,000 or 500,000. You don't want to be subjected to financial penalties, as well as the reputational risk that it poses.
Thank you, Jan. I think, especially a number of new members here, you're sitting here with big eyes and everyone's afraid if you hear the FIC and compliance. But that's why the association creates these booklets, to help you to become compliant. If you're not a member, get this booklet so that you can become compliant. I think compliant with the FIC is very important. I think, Jan, you've been talking to us for 2 years now, and at some stage, enforcement is going to take place, unfortunately. Now, going into a little bit of data and compliance, Magauta, I'm going to give you the floor to talk a little bit about data.
Thank you, Leonie. I will just explain a bit of what SACRA does. We facilitate the sharing of payment profile information to the 6 authorized credit bureaus. We co-own the central system, which is the central data hub, through which credit providers and data providers submit daily and monthly files to the credit bureaus. So the requirement in terms of regulation 1913 that has been issued by the National Credit Regulator is that if you are a registered credit provider, obviously you know that you have to comply with the affordability assessment regulations. You need to prevent reckless lending, and the requirements are that you need to check credit bureau data in addition to assessing affordability. So if you are currently not submitting data, you are non-compliant. And what we've done with the smaller credit providers is that a lot of you are not able to have standalone systems like banks and so on to be able to submit data. So what we've done is that a lot of you then have to link with what we call an ALG person. That mostly are loan system providers, which are helping you with origination, with compliance, and with data submission. And we have about 12 ALG leaders that are registered with SACRA that help small credit providers to submit data to the credit bureaus. ACPAS is one of them, so I'm not going to advertise them, but I'm going to list all of them that are registered with SACRA that you should contact, and they will then help you to submit data. We have ACPAS, we have Calidet Technology, we have Delta IT, we have Experian, we have FlexiSoft, we have Key Concepts, we have Loan Info, Modality Apps, Mycomex, PayPocket, QueenPay, FinTech Fundi. All those entities are registered with SACRA to assist small credit providers to submit data to the 6 authorized credit bureaus. And why do we have a central system? And why can't you just on your own directly submit data to the credit bureaus? Is that obviously we want you as a credit provider to have a full picture across the 6 credit bureaus of the exposure of the consumer. So that is why we have a central system, and that is why Regulation 1913 doesn't allow you to submit directly. You have to submit through SACRA. And we have seen quite a lot of challenges in this sector, the smaller credit provider sector that is linked to ALG leaders. Because what we've seen is that, you see we have 12 of them. Today you decide that, oh no, I'm not happy with this one. I want to use the next one. What you don't do is that you ghost your previous one. You don't close out that account. You move to the next one. We have data then that is not being updated at the credit bureaus, or we have duplication of data because now you are submitting through 2 systems, or your previous system provider has suspended your submissions, and there's a time lag between when you then go on to the new one. I think that is a big challenge that we need to deal with. So you need to be responsible and engage your loan system provider if you decide that you want to use the next one, because that impacts the integrity of the data that is sitting at the credit bureaus. That's a big challenge that we are currently facing. That movement between the ALG leaders is a problem. So, and then we also have people that are not submitting, that are not linked to anybody, that are not submitting data. That impacts the whole ecosystem because you are introducing risk into the market where somebody who then is compelled to check at the credit bureau will not find that data. So it's very important for everybody that if you are giving out loans, you need to submit data within the requirements of Regulation 1913, which also prescribes time frames within which you need to submit data. For example, your daily files, within 48 hours of concluding a credit agreement, that information should have been submitted. Or if you close an account, and then the payment behavior is submitted at month end. So from a SACRA perspective, we are really encouraging you to make sure that if you are linked to an ALG provider who will assist you to provide data to the credit bureaus. And we have a stand outside. There are more clever people than me who deal with these things on a day-to-day basis that you can talk to. You know, CEOs don't know a lot most of the times. So talk to the people at the stand, and they will help you understand how the whole process works. And the other thing is on the fees. I think the fees that we charge are very low for the lower level sectors. For example, a bank would probably pay 200,000 rand a year to use the SACRA system, whereas a small credit provider, I think, is 800 or something. Very little for you to be able to ensure that the data consumers are properly reflected at credit bureaus. Thank you.
Great. Thank you, Magauta. Let's take it to the audience again. Any questions specifically on data, on FIC? Yes, sir.
Thank you. Floyd here. Just in terms of the data submission on the SACRA platform, why is it that, for example, if you are a credit provider, you would get, for instance, a complaint from a customer who would have pulled a credit report from another bureau, and they would inform you that their profile on the bureau is incorrect or is not updated. But when you inquire and check with your subscribing bureau, for example, and you pull that report, you find that it is up to date. What would be the reason for that confusion in that aspect? Would it be that perhaps the other bureau is not, as you were saying, they're not updating? Would it be that? And how do you go about assisting a customer to have that corrected? Because depending on which service provider the credit lender is subscribed to, that's where they submit their information.
Okay, currently, I think the NCR has more than 50-something registered credit bureaus. There are only 6 credit bureaus that are authorized to hold payment profile information. And there shouldn't be any difference across all of them. But like I've said, you have credit bureaus or data providers that do not update timeously or stop submitting, and that creates a problem. But the profile of the consumer across the 6 authorized credit bureaus should not be different because they are submitting through the same funnel.
Good. Jan, here's what...
But let me just explain that remember that we are talking about payment profile information as defined in the National Credit Act. Credit bureaus also buy data from other sources other than credit providers, and those other sources don't submit through the SACRA process. And that is why you will find that there might be differences, because one credit bureau, for example, might be buying municipal data or other data that is not payment profile information as defined, and that creates differences.
Thank you, Mahota. That's a good answer. So we find this problem everywhere. If you're registered with the NCR, you're visible. If you're not registered, what then? So does FIC only focus on the credit providers registered with the NCR, and what is the plan for the non-registered providers?
Okay, so good question. Again, the answer is the registration with the NCR is not the issue. The question is whether you are an institution that should be registered under the NCA. So if you fall within the NCA parameters, that means that we can inspect those institutions as well, and they ought to register with the FIC as well. So that's the principle. It is often more difficult, and I know about the problem with the NCR, and I remember a time when we clamped down in the Eastern Cape, for instance, on machinistas that worked at the pension payout points. And it's extremely difficult to find those kind of individuals and prosecute them. So we did an extensive exercise there, and we did have some results. But it remains an issue. It is an issue because it's not easily identifiable. But the principle certainly applies, that all those institutions must be registered with us as well, and obviously with the NCR. Then there's a B part to item 11 on credit providers, and that is business-to-business credit that falls outside the scope and ambit of the NCA. And those institutions, even though they don't fall under the Credit Act, must also register with the FIC. It is a huge challenge for us to find those institutions. And I think to a large extent we will all agree that there's a huge opportunity there for money laundering to take place. So it is something that we're working at to ensure that we have an understanding of what the universe looks like. At the moment, it's quite difficult to determine it.
Thank you, Jan. I think the next thing I want to talk is about fraud. So I was at a big member's office the other day, and they were sitting in the room and they got hit with fraud of hundreds of thousands of rands. What are you seeing in our industry, and what can you do for our members? How can you guys assist our members? What is the trends in the industry?
I'd like to take a step back just before I answer the question, just to give the members or the delegates here an idea of what it is actually that we do. So SAFPS, we've been around since 2001, so it's been a while, and we specialize in compiling and sharing confirmed fraud data with our member organizations. Now, typically, our membership covers multiple sectors within the South African economy. We've got all the big banks on board, we've got a lot of big retailers, we've got telcos, insurance, and the like. But we also play very much within the microfinance space as well, and we have for a number of years. The idea of SAFPS is that members contribute confirmed fraud data, and I must stress confirmed fraud, so not necessarily convicted fraud, but it means that a member has uncovered fraud. It could be during the application process. They've done some sort of forensic investigation and determined that there is an element of fraud there. And once those aspects have been met, they're allowed to load it onto the database. What then happens is that information is then available to all the other member groups to be able to look at. And I think it's important to note the coverage that we've got. Because of all the sectors we're playing in, we all know that fraud syndicates don't just target banks, they don't just target microfinanciers. They will create a fraudulent identity, for example, and they'll go mad across multiple sectors in the shortest possible time to get the biggest bang for their buck, the effort that they put in to create that identity. So by loading it onto a centralized database, we can share that or give access to members across the board to that data so that they can use it in a risk-based approach when they're processing applications. Now, if we have to look at the typical trends we're seeing within the microfinance industry, and they're not very different to what we're seeing across other industries or other sectors, the percentages might vary slightly, but we can see the biggest hit is fraudulent documentation. So that would typically be within an application process. It could be a fraudulent bank statement, it could be a fraudulent payslip, and a lot of it is related to first-party fraud. So that would be where the identity owner, if I could call it that, the legitimate consumer, is actually manipulating their own application documents to qualify for a better facility. So, for example, what I'll do is if I'm earning, say, 10,000 Rand a month, I'll sort of up that on my pay slip and fudge my bank statement to make it look that I'm earning 15 so I can get a better credit limit or for my application. We're also seeing multiple forged documents coming through. We know that a while back we hit a couple, the law enforcement, DPCI, hit a couple of boiler rooms in the Oval area where you could actually go and buy a complete financial profile that was linked to your identity through various means, but you could buy a pay slip, a bank statement, and various other supporting documents, confirmation of employment to link that. So that's the big one. We're seeing in certain areas within the microfinance area, some of the members have got relationships with financial institutions who open transactional accounts, and there's a bit of a joint venture going there. We're seeing a huge increase in money mule activity there, where consumers, and I think it's very much the times that we're living in, consumers are making their bank accounts available to criminals to launder the proceeds of crime, and talking very much to what Jan was talking about, money laundering, terrorist activity, and all these things somehow linked back to human trafficking and all these other great crime types. It's not unique to South Africa. We work very closely with sister organisation CIFAS in the UK, the Australian Financial Crimes Exchange, and then local entities like the Insurance Crime Bureau, and we're seeing these trends. Money muling is happening across the board. We're seeing impersonation coming through, so where a fraudster impersonates a legitimate consumer. It could be a fraudulent ID that they've created or an identity document that they're using online that's been manipulated. But what we're seeing now as well is that credit providers are being impersonated. So what will happen is, we've all seen these WhatsApp scams, these investment scams, but importantly within the microfinance area, where these criminals go out purportedly to be a financial institution. And they will go out via WhatsApp campaigns, emails, social media platforms like Twitter and Facebook and things like that, and advertise loans available. And they'll say, look, it looks very much like the legitimate organization. They'll engage the consumer, and the consumer will be told, look, we practically approved your loan, but there's an administration fee that you need to pay before we disperse the loan. And the consumers get suckered into doing that, and they don't get their money. And that has a very, very definite reputational effect on that credit provider, because these consumers are now phoning up and saying, hey, I paid the 400 Rand, where's my loan? So we're working very closely with our members in that industry as well to help record that type of data on the database. So we're logging things like the WhatsApp, the phone numbers linked to the WhatsApp addresses that go with that, the email addresses and so on. So really vital information to be shared amongst the member group, because, and very importantly, that members update this so that we can share it, or other members have got access to it, because it helps prevent fraud. I mean, just to give an idea, last year alone, we assisted our members in preventing 6.8 billion rands worth of fraud. And it's a very understated figure. We believe it's significantly higher. But yeah, so those are typically the trends that we're seeing now, specifically within the microfinance area.
From MFSA side, what we're seeing from our members is a lot of impersonation. So where these fraudsters are acting as credit providers, they are using names. And what we basically do at this stage is we report it to the NCR, because if there is questions from the consumer, the NCR must know that this is a fraudulent transaction that took place. And obviously social media is making it a lot easier. Let's take questions from the audience on fraud, on FIC, on NFO, on data. Is there anything in addition while we're going there? Jan, do you think the Kofi bill will be made law by December 2024 or soon thereafter?
Honest answer is I don't know. So there was a discussion yesterday at the Banking Law Symposium. I missed that discussion. So if I may, I will try and find out, and I'll give it to you in writing. But this is always difficult when it comes to legislation. And we know this has been in the making for quite some time now. So, yeah, sorry.
Thank you very much. Leon, my question goes to Jan. Even though we appreciate the fact that you've given us plenty of time to register as a microfinance institutions or registered credit providers. We've been given a long time to register, but now, what worries me is the sanctions that we're gonna put in place, like to say, you are gonna, all those registered credit provider at NCR, I'm registered by the way. So all those credit providers that are registered with NCR that are not registered with FIC, you're gonna issue a fine. Understandably, it's been a long time. And then again, you're saying, now those that are registered with FIC, some of us, but we have not submitted. And then you automatically classify those credit providers as high risk. Don't you think it's a bit unfair? Yes, I understand maybe the credit providers should have submitted. But I don't believe that they don't submit because they don't want to submit, especially those that have not submitted. There is what? Yeah. So, but don't you think it's unfair to automatically classify those credit providers that are trying to do something? You classify them as high risk, while you know the microfinance industry, the type of the services that we are providing, we are not supposed to be classified as high risk. But because now they have not submitted the risk register, which automatically classify them. I want to link this with the problem that you are facing as microfinancers that are trying to do things by the book. You know that cost of compliance is a serious issue. We are very small businesses. And then we are always loaded, burdened with compliance We want to comply. And then the risk that you are facing is that the people that are not in your radar, the people that are, the machinistas that are not registered with NCR, now they are benefiting because you're not going to go after them. You're not going to issue them fines. It's going to be very difficult for you to get hold of them. So by issuing these statements, in actual fact, I feel it's discouraging the compliant or those that want to comply registered credit provider to continue doing business in a legal way, because they're going to be issued with fines and everything, and then they will go underground. Secondly, I want to say, okay, what I wanted to suggest is, don't you want to look maybe internally and say, what help should we give these credit providers? Those that have not submitted, how can we continuously motivate them? Maybe we expect them to self-educate. We have got a lot of information online. Maybe what educational programs are you bringing to the credit providers to ensure that they are in compliance? Again, collaboration with NCR. The regulators, I think they need to collaborate together. For example, if you were given in 2022 that you are supposed to register, why FIC does not collaborate with NCR and say, NCR, for them to be able to renew their certificate, they must submit a proof of registration with FIC to start off with. And for those that have registered, if they have not, if they're renewing their certificate, they must provide a proof of submission of the RCEP without putting in these harsh sanctions. Thank you very much.
Very good point.
Points.
So let me start right at the first question. Is it unfair? 2 years later, and you're not registered. Is it unfair? Can I say, but there are other institutions out there who did not register? Can I say, there's no requirement on me, I'm doing legitimate business, when I'm actually not doing legitimate business? One thing you need to understand very carefully is that you can be abused for money laundering and terrorist financing purposes. If you don't have that understanding, you don't understand the risk that you face. So let's say you take on investors. These investors invest in your business in cash. They give you 2 million in cash. You lend out that money and give them a return. You may be abused for money laundering purposes. You can go to jail. So the mere fact that you are registered and report such suspicious and cash transactions covers you to a large extent when you are faced with such a criminal charge. So I think we need to be speaking honestly to each other. If I'm saying that I am a compliant institution, being compliant with the NCA is one requirement. Each one of us need to comply with the laws of this country on a daily basis. We don't get to choose which ones we want to obey. So we have given quite an opportunity for entities to come into the fold. So mainly our argument to FATF at the moment is that the RCR's not submitted, the risk and compliance returns, that those institutions are automatically high risk. But we do say to you that if you are not registered, and you are registered with the NCR, and if you should be registered with the NCR, you need to come into the fold, and quickly. Let's talk a little bit about awareness. Spot on. How many awareness sessions have you attended that the FIC has conducted? How many? 1, 2, 10? Excellent. So, that's the point. It's all good and well to say, if you go to the website of the FIC, you will find a plethora of information, guidance notes, directives, instructions, the act, the regulations, communications that we send out. So if you are registered, You will be going on the Go AML platform. That's a platform where we communicate with the entities that are registered. So you will be able to do that. But if you're not registered, then you won't receive that information if you don't go and attend the webinars and the roadshows. So there's a roadshow in Pretoria on the 7th of November. How many of you are attending that roadshow? Ah, you see, I like that hand. So that's what you need to ask. The idea, and by the way, the idea is not to issue harsh penalties. The idea with all of this is to get a change in compliance behavior. And you will not get a change in compliance behavior if you do not come into the fold. So there's a lot of complicated, complex discussions that we need to have on what exactly are the compliance obligations. You know, so if you talk about having a risk-based approach to your business, you must understand that it is the risk for being abused for money laundering purposes or terrorist financing. It's not the criminal activity. It's not fraud, corruption, whatever. It is that possibility that you can be abused for money laundering purposes. So if you understand that, and you understand what the risk-based approach entails, and that I need to look at my clients in totality and my products and see which areas are the highest risk, and then apply that highest risk, my resources, my funds, my money, my expertise, my attention, all to the higher risk institutions. So that's going to cost you actually less if you have an understanding of what the risk-based approach is. Then, if you draft an RMCP and you tailor that RMCP according to the risk that you have as an institution, and by the way, it doesn't mean that because you are all microlenders, that the risks will be equal. So it very much depends on the products, your clients, your geographical area, the means of payment. All of those issues come into play in deciding what the high-risk institutions are. And you may actually say, I have only, of all my clients, I have only 5% who are high risk. That's where your attention goes to. So what is this all about? It's all about financial intelligence. That's what the FIC is after. We are not an enforcement body. We are an intelligence unit. That means that we want you to report certain transactions. Cash threshold transactions over 50,000 and suspicious and unusual transactions. And then there's the targeted financial sanctions and terrorist financing reports that you need to file. Those are very key reports that we want, because we want that information so that we can disperse that to the enforcement agencies, and ultimately the enforcement agencies will conduct investigations and they will then prosecute those entities. So I have a lot of sympathy for this group because I understand you very well. I was previously at the NCR and I understand this industry very well. So I do have sympathy with you. But my sympathy ends where the law starts. So the law says to me, you need to register. I can't apply that to my will. That's what the law says. And you as a citizen of the country and as a business entity need to comply with the law. So we have been, I think, quite fair in not pushing the issue until now. My advice to you is really to limit your exposure and your risk for financial penalties. We don't want to go there. I would rather see you all registered and I don't have to issue any financial sanctions whatsoever. That would be the perfect world for me. I don't find any joy in it. But the issue is, if we don't have a change in compliance behavior from credit providers in respect of FICA, we will take action. That is undoubtedly so.
Thank you, Jan. I think that is a warning, and that's a very serious warning. Before I get to you, Marty, I want to go to Rihanna, and I want to talk about this impersonation of credit providers and the complaints and questions you get at the NFO and the processes that you follow.
Is this on?
Yeah.
Okay. I think that is really a question that you must direct to Roy, because in our world, the complaints that we will see will be about impersonation of consumers who will then one day find out that they have a loan that they have no idea about. And then they will have a dispute with the credit provider. They can't get it resolved, they're not believed, and then they will come to us and say, please help. So we do not see the complaints from the credit provider side, like the example. So I think Roy will maybe be able to enlighten us. I think, can I just quickly add to everybody's woes here, in addition to what Jan has just told everybody, and Magauta, in case there's anybody here in this audience that's not aware that same 8,000 registered credit providers are also supposed to be, in terms of law, required to be a member of the Ombud scheme. And I know that for the years now, the MFSA has been driving this and shared the information at every platform. But, you know, surprisingly, there are still people who hear it for the first time or are not aware or just don't understand why. It does remind me of something I just need to share, that many years ago, I will give my age and Jan's age away here, because it was like 18 years ago when we both worked at the NCR, just as the NCA was introduced, and I would get calls, I was the legal advisor there, I would get calls of credit providers who would say that there's an urgent matter, they need the law changed because this law does not work for them. It doesn't suit their business model. And they actually seriously wanted to have meetings with the NCR to have sections of the law changed because it didn't suit them and it didn't suit their business model. Now, unfortunately, that's not the way it works. So yes, there's a lot of compliance requirements on all of you. So every registered credit provider, in terms of the FSCA or FSRA Act, in case you didn't know, is obliged in terms of that act to be a member of the Financial Ombud Scheme. And if you're not, you are in breach of the legislation. When and how the sanctions will come, whether it will be by fines or whether it will be your registration or your registration with the NCR, that is yet to be seen. But I think it is on the way. I think there's a lot of new sections that are being implemented. The Ombud Council has really been established and is doing a lot of work. So the Ombud system and giving your consumers access to redress, free redress, in case they have a dispute, is something that this country and our regulators is very serious about. I think government is very serious that consumers must be protected at all times. Yes, business must operate. Business must make money, but consumers must be protected. And that's where the Ombud schemes come in, only when there's a dispute that cannot be resolved. So I think there's some awareness, and I hear about roadshows and all sorts of things, and maybe in due course the Ombud schemes will also have to do that. But I think just from my side, we are available for any questions. We've got a stand, but also there's a website. Leonie will have my information. So if you're not a member of the Ombud scheme, please be aware you are supposed to be. And if you're not, you're again in breach of that legal requirement. Thank you.
I just want to understand, may this become a condition of registration with the NCR belonging to an Ombud?
Yeah, we have had discussions previously, and so that's one route to enforce the legal requirement that's already there. The other one is, of course, through the FSCA, because it's a clear breach of the FSCA. Yeah. So there they could also issue fines in terms of that act, and they could also have sanctions on registration and licensing.
Yeah. So to be really honest, guys, if I look at the compliance requirements, I really feel for you guys. It's FIC, it's Credit Ombud, it's SACRA, it's NCR, it's MFSA. You know, guys, it is really, really difficult, but this is the stuff that we have to start complying with. However, if we talk tiered regulation, I don't think we should just talk it National Credit Act. We should talk it FIC as well. Because is this guy with a 15,000 Rand book per month really that big of a risk? So I think this is the kind of stuff that we should start at lobbying for, is tiered regulation specifically for the smaller credit providers. Yes, sir. Question at the top, and then Marty. Marty first. Yes.
Hi, sorry, Leonie, thank you so much. I just want to mention on the FIC, I don't know, if you are not registered, I would suggest you do that, but there's the website that are the most user-friendly to use is the FIC's website. There's no other regulator, sorry, not to be rude, but they are the best website as I have been using since the NCR tried to make a website. So you will find everything that you need on their website, and they're updated. So you don't have old information, it's recent information, and it's very, very user-friendly. All the seminars are free. You don't pay for their seminars. I have not paid for a single FIC website, seminar till date. So you don't pay for it. And they have thousands and thousands of YouTube clips. If you want to know something, just subscribe to their YouTube, and they put all the seminars from the past on the YouTube. So you can go listen to them in your own free time, and they literally educate you on FICA. They tell you what is required. They explain it in simple language. I promise you, you won't regret it to subscribe on the website and make sure that you link up with the information they have. Yes, it's very overwhelming. I can tell you there is a lot of PPCs and guidance notes, but they simplify the act for you. So I would suggest everybody to go register and see if they cannot use that platform, especially the website. Thank you.
Thank you.
I don't know this lady from a bar, so I have not paid her to say that. But I thank you for saying that, because we're trying our best to do so. So we are very, we engage with everybody, and we try to do targeted awareness. So we're trying to talk about issues like beneficial ownership, and deal with that as a topic, because that on its own is a difficult topic. So we do understand that being compliant entails quite a lot.
Yes.
And some of it is going to be extremely difficult. The challenge is to get the basics right. So we have a lot of engagement with the NCR, other regulators, and we even have a forum where we talk to regulators who are not AML supervisory bodies, like the NCR, like the PPRA, like the Legal Practice Council. All these entities we speak to, and we have a forum that we regularly. You asked the question about talking to the NCR. The NCR is going to ask you in their compliance return whether you have an ORC ID and whether you have an RMCP in place. So we have those discussions with the NCR. But thank you very much for that comment. It's quite useful. Thank you.
Question?
Hi everyone again. I'm Nelson. With regard to the compliance of FIC, I just want to have a few questions, especially when it comes to understanding of this money laundering thing. Is money laundering that we report, is it based on what we see suspicious on the client's bank account, or is it based on cash?
I didn't get the question.
Is it based on what you see on the bank account?
What we see on the bank account of the clients, or is it maybe the client when it comes to pay with cash?
When you should report it.
Yes.
When you should report, look, what you report is on the one hand cash transactions, and then it's quite easy. If you receive cash or pay out cash of 50,000 and more, then you need to report it. That's a straightforward issue. The suspicious and unusual transaction reports is a bit difficult. That's when you don't have to have the facts. You just have to have a suspicion that the transaction that you're engaging with is of a nefarious nature. So let's take a motor vehicle dealer. So somebody comes to buy a new Prado, and they come with the price is 1.5 million. They put down 750,000 rand in cash. They come there with a checker's back and they put it down there. Now that mostly would be, and the person says, I'm employed as a civil servant. So immediately that raises questions, right? So not only are you required to look at a cash threshold report, you also need to report that transaction as a suspicious transaction. It does not require of you to have the facts. It's a mere suspicion. Then you have another set of facts where you are obliged to screen your clients against the targeted financial sanctions list. So if you onboard a new client, and at any point when the list changes, you need to check your client against that TFS list. And it's an easy question. The problem is that sometimes you can have a false positive. But that's a separate issue. So those are mostly the reports that apply to this environment.
Hello? Okay. I think that why I'm asking that is because of we as micro lenders, we are trying to understand where do we fit in, especially because of number one, our customers, we intend to know where does the money come from the employer. Hence, that's why we do the employment confirmation. So it becomes tricky to understand in terms of the money laundering because of exactly we know with the client that we are dealing with, where does the money come from. So when it comes to us, we need to report the money laundering, and it imposes more cost on our, as a part of the compliance. And as the lady said, even if you register, you still need to submit the report. But we know definitely maybe once in a while, that's when we can have that client that we can report. But all the rest of the days or the month, you still need to pay someone that's going to assist you with compliance. So that's why I'm asking, how is it relevant to us as money launderers? Credit providers. Thank you.
So we do have a draft PCC out, PCC 23A, and in that PCC we describe what we label as red flags that indicate to credit providers which are possible red flags that may occur in your environment that would be a suspicious or unusual transaction. So again, to your question, sir, and this is quite important, is you need to apply a risk-based approach to your environment. If your environment only has a low percentage of high-risk institutions, that's usually where you would spend your effort when it comes to compliance, right? However, if you have somebody who takes a 30,000 rand loan and pays it off in 2 days, takes another 30,000 rand loan, pays it off in another 2 days, you're going to see a trend, and you may say to yourself, is this person not busy with money laundering? You need to report that. So it depends on the facts. Now, what we've always said is that industry is best placed to understand its own environment when it comes to money laundering. The problem in the credit industry is you have not yet applied your mind to that question. So thank you for the question. And you'll find on our website a lot of information that can assist you. Also look at PCC 23A. We're going to issue it again, specifically because we've had a lot of comments on 2 issues. The one is on incidental credit, and the other one is the purchasing of loan books. Now, I have no doubt in my mind that the purchasing of loan books, where you in any event have to register with the NCR, falls within the scope of FICA as well. The other one on incidental credits, I have my own views, and I'm not allowed to air it at the moment, but I have my own views. I don't think it was the intention of the legislature to make that environment part and parcel of this, but that needs to go out for comment again, and then when we receive comment, we will finalize that PCC.
Thank you, Jan. I think Roy, Rihanna, Magauta, 1 minute close, and then we go on to the next panel. Roy?
Leonie, I'd just like to address that one question that came up, and Rihanna mentioned it as well. So where a credit provider has been impersonated, what we're seeing a lot of our members are doing, they will in their own right report that criminally, but they must please encourage the consumer to make a criminal case there as well, because effectively the consumer is the victim there. We are, however, able to assist not with investigations and restitution, but last year we created a solution called YIMA that we've made available to consumers out there. It's a free service where we are helping to educate consumers on scams and how not to fall victim to scams and so on and so forth. And they can share that, the consumer can share the details of that scam with us. Obviously, it needs to be reported to the police as well because there's a criminal case going on. But what we will do then is take that information, analyze it, and we work with our members and provide the relevant information to our relevant members as well. So to help neutralize these syndicates as well. But just a bit of advice. So YIMA has got a website, yima.org.za, and there's plenty of advice for consumers out there as well. Thank you.
I think in closing, just to say that I hope that you are all subscribing members of the Ombud scheme. If not, please do make contact. I will engage with Leonie and maybe we can set up something if there are any questions that we can have a whole session just about the Ombud scheme. And I would love to hear your experience, good and bad or indifferent. The NFO is a new scheme. It is, in this case, really bigger and better than what we had before. The Credit Ombud, which served your industry, was a very small scheme for many years in existence, doing good work. But obviously, scale, the NFO is a much bigger organization. We're now 160 staff members in 2 cities, and we're really there to ensure that dispute resolution works for both the customer and for the industry. Thank you.
Thank you, Leonie. I just want to say the sharing of data is not about only preventing reckless lending or complying with the National Credit Act. Any business that is lending requires reliable, accurate, up-to-date data to make the correct credit decisions, because otherwise you might lose that money and your business might go under because you are lending to the wrong people, because you are not accessing the correct and up-to-date information. So it's very important for everybody to share data so that the decisions, the credit decisions that you make, the lending decisions that you make are based on good data. It's good for the whole ecosystem. So I don't think anybody can say that they don't want to submit data. It really is a thing. It needs to be done. Thank you.
Thank you, everyone. Thank you so much, panelists. You guys can go to your seats. We really appreciate you.
Thank you.
We can welcome the NCR now. The NCR panelists, you can come up so that we can start get everything ready and mic you up. Then we are going to do 2 lucky draws now, just to get everyone excited and happy for the National Credit Regulator. Okay, so now we can spin the wheel. So everyone's names are there. We have those boxes as lucky draws from our different service providers. The NCR can come up and you will get mic'd up here. The first winner is John Pierre Johnson. John Pierre? Not here. Let's do another spin. The next person is Edith Ramatsetse. Edith? Oh, come Edith, come. Congratulations. We can do another spin tonight.
You don't check your WhatsApp.
Okay.
People will be leaving.
Yeah. And the next one is Walter Simon. Walter? Not here. Is he here? Come. Congratulations. So Susan will be handing over your gifts for you. This is from all of the service providers. They put a box together for you guys. Congratulations. You can get these to eat it. Stand there with a picture. Okay, I think what everyone has been waiting for, and I'm definitely going to motivate that you send questions to us, it's the National Credit Regulator. So, ladies and gentlemen, I want you to introduce yourself to our audience, your positions, where you are, and where you fit in.
Oh, yeah, it's working. Good afternoon, everyone. My name is Leboga Musupye, and I'm the acting manager for the Debt Counseling Department at the National Credit Regulator.
Good afternoon, everyone. My name is Ntupang Mahuleho. I'm the Executive Senior Legal Advisor at the NCR. I'm responsible for the oversight of the Investigations Department, complaints, education, HR, etc. Happy to be here with all of you.
I think mine is on. Good afternoon, everybody. My name is Tebogo Nzimane, Manager for the Investigation and Enforcement Unit within the NCR, and I head up that unit.
Good afternoon, everyone. My name is Zolile Mwananiso. I'm the manager of the Registrations Department.
Okay, great. So let's welcome the NCR. I think it's always very daunting for them, as it is for us, as you are the regulator. I think compliance for the association is very important. Tebogo, I want to give to you first. You are the new head of investigations. What are you seeing in the investigations department? And I think we would really like to see a focus on the illegal credit providers. You know, what's happening in that space?
Highly contentious issue within our space, and I think for the last quarter, well, the second quarter, our main focus has been on the investigation of illegal credit providers. And I think, you know, we don't do our investigations in vacuum. We actually do a proper assessment. I mean, I have a team of inspectors and also legal advisors who sit and go through the necessary sample files that we would have obtained during our raids. And in doing so, you know, we go through it meticulously. If you look at our stats within the NCT, which is the National Consumer Tribunal, you will see that our department specifically is very active in taking action against those who are not properly registered with the National Credit Regulator. And you know what, I can tell you that in our raid in Mpumalanga as well, and also DR, we now have you know, criminal prosecutions which have gone through where people have been sentenced. So we are now really actively looking into that space. I know that you know, we're trying to shift a little bit away from it, but it's an anomaly that we cannot ignore as the regulator, and it's something that we're really looking into and honing into as a department. So we are looking into it. I can tell you that just last week we got a prosecution of 2 gentlemen in Mpumalanga who are illegal, you know, who are not registered credit providers with us, and they have been duly sentenced. And I think our stakeholder relationship with the Hawks and subs has really assisted us in actually achieving that, because the main goal, Ntupang will attest to that, was that we ought to have, you know, a good working or stakeholder relationship with the local courts in ensuring that even if you are not successful in the SNCT, but we have the second leg of the criminal proceedings, which has really assisted us. And I know that you want to put 400 more on my plate. I don't know where I'm going to get the budget, but we'll make a plan with regards to that. So we are really working hard on our side, and I think our judgment speaks for themselves.
So I'm going to open this to our members. Have you got any questions specifically for the NCR with regards to compliance, investigations, registrations? I know you will not necessarily raise your hands, because usually what happens is our members are afraid if they raise their hands, then tomorrow they get a desktop compliance audit or they get an inspection. So I completely get that. So the other question that I'm going to ask to Ntupang is specifically with regards to compliance. How are you seeing that our members are trying to comply? What are the areas of non-compliance? And I know you also have some information on tiered regulation. Let's talk a little bit about that.
Yeah, thanks, Leonie. I think without maybe focusing on contraventions, I think for me, what we are still struggling with is, I think Mahauta has mentioned it, non-compliance with the submission of information at the credit bureaus, non-compliance with Regulation 1913, and I think Mahauta has explained it very nicely, the risk that this non-compliance is introducing to the industry. Remember, one of our mandates is to improve the quality and the quantity of consumer credit information at the credit bureaus. And this is quite important because it is through the improved quality and quantity of this information that we can curb reckless lending, but most importantly, we can support financial inclusion. In other words, we can get more clients for you. If more data is shared, more consumers will be more eligible to access credit. So for us, it's quite important that we impress upon everyone the importance of complying with Regulation 1913. But in addition to that, we are seeing a lot of non-compliance with the submission of the statistical Form 39. We really need the data from these forms. Again, when you look at the National Credit Act, we are enjoined to analyze the statistics to monitor trends. And one of the specific trends that we are required to monitor is the needs of the previously disadvantaged consumers, low-income consumers, or consumers who are in the remote areas. And who are these consumers? Your clients. So until we get the data to analyze their needs so that we can create a regulatory environment that will make it conducive for you to service these consumers, we need the data. So it's not a matter of us trying to say we're increasing the burden of compliance. We need the data to ensure that we can create a regulatory environment that will make it easier for you to service particularly the list of consumers that I've mentioned, the previously disadvantaged, the low-income consumers, as well as those who are in the remote areas. And we all know these are the consumers that are not being serviced by the banks. They are particularly your clients. So until we get these statistics from you, we are going to remain in the blind in terms of what are the needs of these particular consumers and where are the bottlenecks to ensure that they can also access credit. So on a high level, those will be the issues for us. In terms of our approach on compliance, I think we have already mentioned, we generally focus on two risks. There's systemic risk, where the risk relates to the number of consumers that can be impacted by a conduct. And in this risk, we are comfortable to say that the smaller credit providers are not creating the risk, because when you look at the market share, the large credit providers and the banks are still servicing the large number of consumers. So as far as systemic risk, we're not seeing a lot of small credit providers in that space. But we are also required to look at another type of risk, which is vulnerable consumers. We cannot ignore the previously disadvantaged, the same list that I mentioned earlier, previously disadvantaged, low-income, SASSA recipients, remote area consumers, and these are your clients. And unfortunately, we also have to, with our compliance activities, focus on this target group to ensure that they can, participate in the economy and be included through financial inclusion. So those are the approaches that we're currently following. We look at systemic risk and we also look at vulnerable consumers, which will then impact on your compliance activities as small credit providers.
I think debt counseling is a major concern in our industry, and I think this is something that, the NCR is also focusing on a lot. You sent out a circular, you spoke to the different credit providers and debt counselors. Maybe you can just tell us a little bit more about the non-compliance that you are seeing in the debt counseling space and how credit providers can actually report debt counselors that are not complying to the regulations.
I think, can I ask level 2?
Can you repeat what you just said?
The problems with debt counselors, the non-compliance in the industry, and what our credit providers can do to report these debt counselors.
Okay, so if you run into a debt counselor and you are noticing that that counselor is potentially contravening the act, you may contact the NCR. You can do that through the call center. The number is 0860-627-627. And then from there, you will be guided as to how to go about giving out this information. We do have as well a tip of line. It's run by an independent company. You can also use that. I just at the moment cannot remember the number, but you can also get the number from the call center department. You may as well contact the debt counseling department, provide us with the information, and based on what we see, we may maybe start an investigation depending on what you're giving us and if that amounts to a reasonable suspicion, because all we need to do is find reasonable suspicion. Then based on that, we can start the process of doing an investigation to ensure that whatever is being labeled or is being reported, if it is indeed a contravention, then it is curbed and that the people who are involved are brought into book.
Great, thank you. So Lile, from our side, registrations, what can the association and our members do to make your job easier? What is your expectation from us?
Thanks, Leonie. One of the key things as well is when people make applications, they must just submit all the necessary information. That will be the assist us quickly so that we can process their application. But what we pick up most, there will be things like the criminal clearance certificates. They are not submitted on time, and then that delays the process. But in those instances, then it takes a while. But we always advise also applicants that instead of relying on the SAPS, because some of them, they take a while, there are service providers that can quickly assist them to get those police clearance certificates. And then once that is done, then we can be in a position to process the application. But I think those are the key things. If you look at also our application form, it's just a straightforward form. There isn't much required. It's just the minimum information like the CIPC numbers. And then one of the other things as well, in terms of the CIPC, we also just verify as well on our side with CIPC. You'll find that sometimes if there's change in directors, they also need to update that information with the application so that we can be in a position to accept, because it will delay if there's no updated information.
Okay, thank you, Zulile. I think this year we also made use of the registration process through the association, and I think that process went brilliantly. It assisted our members to be compliant, and obviously you guys as well. How do we deal with aggressive debt counselors that put our clients under debt review without their permission?
Yeah, that is definitely a trend that the NCR is noticing, that more and more consumers are being approached. Either they are misled into debt counseling, where it is in certain instances sold as a debt consolidation. In some instances, just a negotiation on your reduction of debts. They normally tell the consumers that they are paying too much, and in some instances even use the NCR and say, I'm appointed by the NCR to negotiate on your behalf. We've noticed that you are overpaying,
And the most recent trend as well that we noticed is in some cases, the recent one that are coming, those people, be it the debt counselor or the agents of the debt counselor, already have the information. Although it is not clear at the moment as to where they get the information from, but they do have your personal information. They would tell you your debts, which credit providers you owe as a consumer, and how much you're paying on them. You know, they have all that information. And so when a consumer finds herself in the process where they have been placed under debt review without their consent, they have to contact our complaints department. There is a process to follow there where they will be provided with a form, we call it a Form 29, and they will complete and provide their information there. And then the case will be investigated to determine how true it is. If it is found out that indeed the consumer was placed under debt review without their consent, we do provide relief by updating DHS, the debt health system. It's the system that we use where debt counselors upload consumers who have applied for debt review. It records the whole process from application right up to rehabilitation and issuance of a clearance certificate. So when we do realize that indeed the consumer is correct, they've been duped into debt counseling, we do provide relief by updating the DHS system with a status code that will remove them from debt review. And this debt health system is linked with the credit bureau. Therefore, the information that we capture during the day, overnight, flows into the credit bureaus, therefore updating the status.
Great, thank you. Then I think Tupang Regulation 23A4 was set aside by the court a long time ago. What is the development on the NCR by the specific regulation?
We have already, I think, a couple of months after the Truworths judgment, we prepared and submitted amended regulations to the DTIC. So the ball currently is within the court of the DTIC to publish the updated regulations so that we can have a complete, ecosystem, if I can call it that, on how to assess consumers for affordability. I really do need to mention, though, that the fact that we don't have the regulation on the assessment of income doesn't mean that we currently don't have a principle under Section 82, because this is a rule that was supporting the principle that is already in the Act. So the principle remains that credit providers must assess income. The how part is what has been set aside. So as we do our work, we do have an expectation to see how you have assessed the income of a consumer, because that section has not been set aside. It's the how part that is currently missing.
Right, thank you. I think for you again, Tebogo, so if you do the inspections, how do you determine who to inspect and who not to inspect? I know that sometimes, you get a complaint, sometimes you don't get a complaint, you just do scouting. What is the process, and, what can credit providers do when your team comes into their office?
Well, look, we wouldn't just pounce on your office. The Act is very clear as to the procedure that we're supposed to, follow. If for whatever reason there's a reasonable suspicion, the reason why our inspectors are also so efficient as well is because they have quite a lot of experience in how they would actually go into your office and evaluate. If we want to go through your particulars, there is a court order that we get, which is a warrant, which enables us to enter into your premises and to do the necessary investigations. We've never been found wanting, and I don't think there's any judgment that has ever indicated that we've ever entered your premises without having the legal standing to do so. So we will look at the sample files, and in all honesty, if there is nothing really there, and there is no contraventions that we have noted, then we will note it as same. But if we do note contraventions, and the contraventions vary, you find that you have contraventions that are serious in nature, and then you find a contravention like, for example, your window decal, has expired. It's something that you can fix. It's something that we can say, no, please comply, as the national credit regulator. And I think people need to veer off this idea that our main mandate is to punish. No, it is only to bring you back into the space of compliance. I mean, if you are extending credit and you have not done proper assessment, that's a problem. That is something that is a contravention that we take seriously. I know that the question was asked there about assessment, but that has not been dealt away with. The fact is assessments need to be done, particularly where you're dealing with vulnerable people. We need to check whether or not you are compliant. We also need to check whether overcharging, there's no overcharging. I mean, some people impose ridiculous interests. Those are things that we will definitely take to the NCT and enforce. But where it is a contravention, where we can either rectify by a compliance notice, we will do that. Where it is and I've mentioned it now, a contravention that is not one that is serious in nature, we will simply ask you, please just comply. But the regulator is there to be exactly that, a regulator. So when we do our investigations, we're not there to punish, but we will check and we will assess what it is that needs to be done. And if there is a contravention that is noted and that is of serious nature, it will be then taken through the process of the NCT.
Well, what I'm glad to hear is that you just don't want to close down businesses. So, if there's small areas of non-compliance, you give our members the opportunity to actually say, okay, let's see how we can comply here. And obviously that's where the association would also like to step in and assist you. So we are way over time, but I believe that you are still going to have like a coffee or something afterwards with us. I'm going to ask you for closing remarks on registrations, investigations, compliance, and debt counselling. Zolile, let's start with you.
Yes. I think in terms of registration, yes, as I've mentioned, some of the key things, that documents that we require for registration to speed up the process, that's key. But also now in terms of the currently registered credit providers, one of the key challenges that we find ourselves when it comes to renewal is them, as Ntupaga has mentioned, they are not submitting the statistical returns, which is the quarterly returns that will determine their renewal fees. And then come renewal time, then the issue now when it comes to invoices, it creates a problem of us sending out those invoices. Also, once it's those ones that have submitted the invoice, the Form 39s and paid the invoices, then their renewal process runs smoothly. And then, but also there are credit providers when they receive the invoices, when they pay, they use incorrect reference numbers. We always insist on the registrants to make sure that they use the NCRCP numbers so that as a reference when it comes to payment. Because that money, when they pay, it goes to suspense account because it cannot be allocated. And that delays the process as well in terms of their renewal, of them getting their renewal certificates. I think those are the key things that the registrants must ensure that they do them correctly as well so that they speed up to get their registration certificates.
Yes, Brett, we have a question.
Good day, ladies and gentlemen.
Okay, there's a lady there first, yes?
Yes, we have, my name is Itabeleng from Exact. My question is, we have been having conversations today and shining the spotlight on other key players within the ecosystem. And one thing I don't think one thing I heard about today, or something that we shed spotlight on, are the consumers. Because to be honest, they also do make our job very difficult. We are very much compliant. We comply in all aspects. We named all the compliance regulators and all of that, everything. I'm not gonna call out the names. But we will do proper assessment checks, affordabilities, each and everything to their core. And we have these consumers that will continue and go out and go to these machonesas. They choose where to pay and what not to pay. There was a video that was displayed on the projector there. We are held accountable to the core. It's fine, but we need to hold these consumers accountable as well. They need to understand that. My sister did mention earlier, what is the purpose of a service agreement if a client signs to say, I agree to pay this money. They go out, they come back, I'm under debt review, I'm gonna pay 11 rand, I'm gonna do this, or they say, take me to court or whatever, excuses. Or in simple terms, they don't want to pay. I think the same way we are being held accountable, we are under scrutiny, we are going through all these challenges and facing so much with just complying. Never mind all these service providers and whatnot. What about consumers? We need to hold those people accountable. I have to understand, because we also mentioned that these matronesses will tell them, suspend these Mondays, do this, do that, but they are afraid of those people that are not compliant. But what about us? So my question is, what are you doing in regards to these consumers? Because we are really tired, to be honest.
Well, there's not really much we can do about consumers except to do consumer education. We really try to focus on, I think from a credit provider point of view, we call it reckless lending, but we do recognize that there's also reckless borrowing, which is why you will see many campaigns from the NCR where we try to discourage consumers against reckless borrowing. We also encourage consumers to repay their debts. So it's mainly consumer education that we can do. The only, I think, protection that I know is in the Act is on reckless lending, where consumers lie to you. Then you are able, and they lodge a complaint or they want to allege that there's reckless lending, there will be that kind of protection. But other than that, the focus of the NCR when it comes to consumers, it will always be consumer education to ensure that they understand their obligations and their rights as they engage with credit providers. Thank you.
Hi, just a question from me. Why does the regulator increase the fees that the credit providers need to pay to you every year?
No. Sorry. No, they've not been increased. Sorry. The registration fees have been last updated on the 2016. They've always been since 2016. They've always been the same. It's just it differs on a category. Hence, we're saying the important thing for us to check your renewal fees. You submit your quarterly returns or your annual return, and then based on the principal debt, that's where we charge your fees. But there's categories, then they are specified because there's 9 categories in there. But yeah, it will depend. If you're for this current financial year, for argument's sake, you were falling under category 8 because of your principal debt, but your book has grown, and then the figure then will fall on the next category. Then that's basically how. But technically, the fees have not even increased since 2016.
Remarks from our department, compliance is king. And I know, and I've noted the whole day, most of the speakers and people have raised concerns about, the fees related to compliance. But one cannot, run away from the issue of complying. Even us as the regulator, we are required to comply. In everything that we do, compliance is there. So what I can stress is that as long as you are registered, as long as you have affiliated yourself with your reputable institution, as long as you comply with the conditions of registration, as long as you know that you are not overcharging, as long as you know that you are doing your assessments, then the NCR is not going to bother you. And that's a fact. But compliance is key. I mean, if I walk out of here, Tupang expects me to be at work, I have an employment contract, and I must comply with that contract. And that's how life works. And if I don't comply, then there will be steps that will be followed. And this is the question to that lady who has expressed a lot of, dissatisfaction with the consumers. Make sure that your contract is in place. Make sure that your credit agreement makes sense to the consumer so that the consumer can comply. And if that consumer does not comply, make sure that there is provisions in your credit agreement that allows you to take the necessary action. So that is my remarks in closing.
I think from my side, maybe as a proviso on compliance, is that the NCR has already started thinking around the idea of a risk-based approach to compliance, or a tiered compliance approach. I think this is us recognizing the fact that we need small credit providers to remain in the ecosystem, because you service the bottom of the pyramid that large banks and large credit providers are not servicing. So if we are going to see an improvement in financial inclusion, we will only see it through the existence of small credit providers. But the burden of compliance might lead to us seeing some of you exiting this market. So we are currently looking into how we can introduce, it's going to be a long-term project, but you can rest assured that it's something that the NCR is already considering to ensure that we can ensure that you remain sustainable and you don't exit the market on the basis of the burden of compliance. Thank you.
Nice.
My final word would be debt counseling is not taboo. So I would call on you not to take debt counseling as a taboo, but rather take it as an opportunity to avoid a bad debt, and then try and participate in the debt review process. So if you are unsure as to how to go about this debt counseling process, maybe you are not so clued up, you can go to the NCR's website, www.ncr.org.za, and then you go under publications. You will see there'll be circulars there that you could read through. And there's also guidelines as well, and explanatory notes to guidelines. What I would implore you to look at as well is maybe the task team agreements, because it does have a summary, although it's a document that we currently through the CIF, it's a process we're still looking into to try and update it with the current events, but it's still a very much relevant tool that you could use, because it does explain the timelines, so it simplifies the debt review, or breaks the debt review process for you. So do not take it as taboo, entertain it. If you still, after going through the website and reading all those documents, you see that you're still unsure, like I said, you can contact the call center. If your question is way too technical for them, they will put you through to the debt counseling department, and one of our administrators will help you go through this process. Thank you.
Thank you so much. Thank you, panelists. From our side, we would really like to thank the NCR. You know, we've been working together quite a while. Sometimes we don't agree, sometimes we agree, but at least it's a positive relationship and we are moving in the right direction. So thank you so much. We really do appreciate your attendance as well. Great. On that note, I'm going to ask Sophie to come up and close the conference for us. Ladies, you can just sit here and Sophie will do the end for everything.
Thank you, Leonie. I'm not going to keep you guys long. I'll go as quick as I can. Ladies and gentlemen, as we come to a close of this truly memorable conference, I'd like to take a moment to reflect on how significant today has been. This is the first of its kind for MicroFinance South Africa, and the discussions we've had today have sparked new ideas, strengthened relationships, and set the stage for future growth. I'm confident that from here we will only grow from strength to strength. Before we must proceed, I must first extend my sincere and heartfelt thanks to our CEO, Leonie van Pletsen, Sunay Kruger, Miranda Tladi, Susan Smith, and Chantal Miller. This is our all-female executive that has put today together, and what a fantastic event. Congratulations to you, ladies. Thank you very much. This event is a testament to your passion, Leonie, for advancing microfinance South Africa. Thank you. Now I want to give a special thank you and a very important acknowledgement to our sponsors. This event simply wouldn't have been possible without their generous support. Their sponsorship has allowed us to bring together industry leaders, innovators, and stakeholders to have these crucial discussions about the future of microfinance South Africa. We owe a huge gratitude of debt, and I would emphasize how vital their contribution has been to making today a success. Let's take a moment to recognize and sincerely thank our sponsors for their unwavering support and a commitment to the industry. If we can have a round of applause. Thank you very much. We really appreciate that. This partnership is invaluable, and we look forward to continued collaboration in the future. I would also like to thank thank the delegates, the Department of Trade and Industry and Competition, the National Credit Regulator, thank you, the Financial Sector Conduct Authority, the National Financial Ombud, the Payment System Stakeholders Forum, the Financial Intelligence Act, thank you, Jan, Banks of Africa, SACRA, CIFA, and the National Housing Financing Corporation. In closing, I would like to thank you all, our stakeholders, who have actively contributed to today's discussions. As we move forward, let's carry the momentum of this conference into the months and years ahead. Together, we will continue to innovate, foster inclusion, and build a sustainable future for microfinance in South Africa. This is just the beginning of a new chapter for microfinance South Africa, and with the ongoing support of all our stakeholders, I'm excited for the incredible future that lies ahead. Thank you once again. I wish you all the very best as we continue to build and grow together and lend responsibly. Thank you very much, ladies and gentlemen. Have a good evening.